Alright. We will now proceed with our last topic for BAPE 7. Pero kahit na ito yung last topic natin for BAPE 7, ito 4 na chapter siya. So medyo magiging mahaba to. Pero not necessarily mahaba. Basta basically, this is derivatives. So let's start. Now ito, accounting for derivatives and hedging transaction. Diba yung hedging yung pag ina-aching ka? Hedging! Badumts. So, to, on a serious note, ito, accounting for derivatives and hedging transactions, which will be our last discussion for BAPE 7. Not to say last discussion, but rather, last topic for accounting for business combinations. Kasi 4 na chapters siya, no? From chapter 11 to chapter 14. Now, a little note lang. Pagdating sa derivatives, for me, ito yung klase ng topic under advanced accounting na hindi mo lang madadaan basta-basta sa following the procedures. Oo, kasi dito, for me personal na to. Itong derivatives kasi kailangan ng analytical skills talaga. Analytical skills of being an accountant. So, kailangan maintindihan mo talaga yung concept ito. Bakit ganito yung nadiderive na value? Ano tong purpose nito? Anong amount nito? Bakit ganito yung nangyayari? Bakit ito yung risk na natitake nila? So, yan yung derivatives. Yan yung basically purpose niya. Concepts behind that. And, ano pa ba? Derivatives. And yung, di ba, na-discuss natin yung foreign currency exchange rates sa previous topic natin. Basically, parang ano na rin yun eh. May pagka-same concept sa derivatives. Kasi nagmumultiply rin tayo. Nagdi-derive ng amount tayo based sa kung ano yung price na meron. So, anyways, since itong derivatives, napakahabang topic. And since goods naman kayo sa BAPE 7, di ba? Kita nyo naman ang grades nyo. Hindi na tayo mag-quiz assignment dito. Kasi, kailan ba? Pagka next week, by Friday, last long quiz natin for BAPE 7, ang topic natin, derivatives lang. Ito, derivatives and hedging transactions. So, para makafocus kayo dun, bibigay ko na agad yung answers sa mga exercises dyan sa books natin. Dito sa book ni Zeus. Para yun nilang tingnan nyo, hindi na kayo para makatipid kayo sa oras. But don't worry, in case of that, bibigyan ko kayo ng 1 perfect quiz assignment for that. Kasi, pagpapagawan ko yun sa inyo, mahaba yan eh. Kung titingnan nyo, mahaba yan. So, para maganda tayo sa time management, diretso na, aral agad for the long quiz sa Friday. Ano pa ba? Ano pa bang gusto kong sabihin? So, yun. So, long quiz tayo sa Friday, BAPE 7. And Wednesday before that, so next weekend, long quiz tayo for BAPE 6. Ang topic natin, gaya na sabi ko nung last video sa BAPE 6 natin, is home office, branch, agency accounting, and some insurance contracts and accounting for BOT. So yun yung last activities natin for this regular semester. Kasi pagka next week, final exam na tayo. Final exam week. So schedule natin for final exam, January 22, which is Wednesday, BAPE 6 rin. January 20 Wednesday, BAPE 6, January 22, BAPE 7. Yun yung schedule natin for final exam. So, mga BAPE 6, BAPE 7 natin. Ang BAPE 6, always Wednesday, di ba? Ang BAPE 7, always Friday. So, napahaba. Chika-chika ko dito. So, let's start with our discussion. Accounting for derivatives and hedging transactions. Now, etong unang chapter to, chapter 11, basically talks about the concept of the derivatives kasi kailangan nyo maintindihan ng concept para properly analyze nyo yung mga later problems. Kasi maraming kailangan gawin eh. Maraming under sa umbrella ng derivatives and hedging transaction. So, ito yun. Chapter 11, Part 1, we will talk about the introduction to the basic concepts. Part 2, accounting for forward contracts. Part 3, sa future contracts, options and swaps tayo. And Part 4, net investment hedges lang to and embedded derivatives. So, basically, pagdating sa derivatives, ito talagang part 2 and Part 3 talaga yan. Yung primary focus ng derivatives, lalo pagdating sa board exam. Ano pa ba? Yang si forward, yang si future, yang si options, and yang si swaps. Itong si swaps, either foreign currency or interest swaps. Net investment hedges, not necessarily. So yan, dito muna tayo sa part 1 discussion. So magiging mahababang discussion to para matapos lang natin yung derivatives. So to, Introduction to Basic Concepts, part 1, chapter 11. So for this, itong learning objectives natin, this is for the entire derivatives derivatives topic. The first one is identify the characteristics of a derivative and give some examples. Pangalawa, state the purposes of acquiring a derivatives. Ano ba ang reason bakit meron tayong derivatives? Pangatlo, enumerate the qualifying hedge items. And pangapat, differentiate fair value hedge from cash flow hedge. So, pagdating sa derivatives, ito yung medyo nakakahilo. Pero mayroon naman yung table para maano yung differentiation nila dalawa. So, with that, dito mata sa introduction. Bakit ba nagkakaroon ng derivatives? Anong purpose yan sa buhay? Ang purpose sa buhay is because of the existence of risk. Alam ko yung risk na pag-usapan nyo na sa inyong auditing, di ba? Yung because of the audit risk, so kailangan nyo ma-minimize yung risk na yun para yung financial statements ng company will be properly presented, di ba? Minimize the audit risk. Now, similar rin yung concept dito pagdating sa derivatives, pero risk in general. Na kaya nag-exist si derivatives in order to paglaruan itong series. It will revolve around this risk. Not necessarily to minimize it or to manage it, but for other reasons din. Malaman nyo later. So, ito, risk. Ano ba ang risk? Ang risk is a possibility daw that an event will occur having an adverse effect on the achievement of an entity's objectives. So, Tagalog ng risk, di ba? Peligro. So, there's a possibility na yung pag-achieve ng entity ng kanyang objectives malalagay sa peligro na baka hindi nila ma-full achieve or baka ma-fail sila sa plan nila. There's a possibility. And the greater the risk, the greater the possibility of failing. Ngayon, the risk is measured in terms of impact, the possibility of the loss. Ano ba yung possibility na yan? Minimal possibility lang ba? Baka probable? Highly possible? Less likely ba yan? Dito pala. Impact, possible loss. Baliktad. Yung impact, gaano kalaki yung magiging loss, the possible loss, and likelihood is the probability. Yun, less likely ba? Most likely? Assured na 100%? Parang ganon. So risk, the peligro, the risk, the danger na magkakaroon ng adverse effect, detrimental effect, negative effect sa plano ng entity to achieve its objectives. Na baka hindi nila ma-achieve, na baka hindi nila 100 or hindi nila ma-achieve lahat ng goals nila. Parang ganon. So, ito, financial risk. Ano itong financial risk? This is the risk na there's a possible future change in one or more of a specified interest rate. Tandaan yan. A possible future. A chance na magkakaroon ng future change in one or more of a specified interest rate. Financial instrument, commodity, foreign exchange, index prices, or rates, credit rating or credit index, or other variables provided in the case of non-financial variable, and the variable is not specific to a party to a contract. So basically, financial risk talks about the possibility that there's a chance na magkakaroon ng changes, future changes sa mga variables na to. Ito naman, ito familiar rin kayo dito. Napapag-usapan nyo ito di ba? Sa financial accounting, sa auditing nyo, pati sa mga management subjects nyo. Credit risk. Ano ba tong credit risk? Lalo na sa financial financial management. Ano ba tong credit risk? Ang credit risk is a risk that one party to a financial instrument will cause a financial loss for the other party by failing to discharge an obligation. Like for example, sa mga bangko natin. Bago yan sila magpautang, di ba? If na-experience yun na, bago yan sila magpautang, grabe yung paghihingi nila ng requirements sa'yo. Kasi they would like to minimize the credit risk The risk na kapag magpapautang sila sa'yo na hindi ka makabayad. So kaya very stringent, very very stringent, very strict sila sa requirements nila sa pagpapautang, sa pagpaprovide ng loans kasi titingnan nila yung capability mo, yung ability mo makapagbayad. Kasi gusto nila makabayad ka sa utang mo sa kanila. They would like to minimize the credit risk na hindi ka makabayad. So yun yung credit risk. Sa liquidity risk naman, this is the risk that an entity will encounter difficulty in meeting obligations associated with financial liabilities that are settled by delivering cash or another financial asset. Na itong liquidity risk, basically, ang perfect example nito is may mga liabilities ka, then yung schedule for payment of those liabilities is coming na, kaso wala kang pambayad. So, pag ganun bang situation, ibig sabihin bankrupt ng company? Not necessarily. Ang pinupunto lang dyan ng liquidity risk, wala kang liquid assets gaya ng cash, di ba? Gaya ng cash or marketable instruments, yung madali lang bang mabenta, madaling ma-encash, kaya nga liquid ang tawag, di ba? Madaling ma-encash, madaling mabenta para maka-receive ka ng cash. So yun, kahit na hindi ka bankrupt, kahit na hindi ka tag dito, negative yung equity mo, kayang-kayang patungan or bayaran ng assets mo yung liabilities mo. Kaso yung mga assets mo, mga non-liquid, gaya ng mga PPE, mga intangible assets, yung mahirap ibenta, mahirap ma-encash, yung mga hindi liquid. So, pag dumating na yung utang mo, kahit na marami kang assets, pero hindi ka liquid, wala kang pambayad ng cash para dun sa mga utang mo, delikado ka. So, yun yung liquidity risk. The risk na hindi liquid yung company at the time na kailangan niya magbayad ng utang kasi wala siyang available cash or other financial assets na madaling pangbayad. Yun yung liquidity risk. The chances of that happening na kahit na hindi siya bankrupt, kahit na may enough assets siya kasi yung assets niya hindi liquid Hindi niya ma-encash agad. So hindi siya makapagbayad ng utang. O yun, problema yun. Liquidity risk yun. The risk of that happening. Ngayon naman itong market risk, this is the risk that the fair value or future cash flows of a financial instrument will fluctuate because of changes in market prices. Now, alam niyo naman, COVID tayo ngayon. Lalo na yung lockdown. Grabe yung market risk na grabe yung changes na nangyari sa market. Na because of COVID, tumaas yung market risk. Na grabe yung fluctuation. Yung fluctuation, baba. Tapos pag may good news, tataas. Pag may baba, pag may bad news, bababa. Di ba? So yun, nag-fluctuate talaga. Tumaas talaga yung market risk pagdating sa COVID. Another reason para nagkakaroon ng market risk is the impendency of war na because of that war, baka maapektuhan yung economy, yung businesses, yung trade. So, nagpa-fluctuate rin yung market risk and some other reasons, lalo na aware kayo dyan pag nag-follow kayo ng news. Kahit nga yung Twitter lang ni Elon Musk is also a market risk kasi it also affects the valuation, the fluctuation in the changes in the market prices. So currency risk, ito may tatlong types tayo ng market risk: currency, interest, and other price risk. So read nyo na lang yan. So yan, intro. Basically, not necessarily intro, but rather the reasoning bakit meron tayong derivatives because of the existence of a risk. Risk. Kasi itong risk na to, may possibility refers to the possibility na due to certain circumstances, due to certain factors, it will have an adverse effect. It will have a negative effect. It will have a detrimental effect on the entity's objective of achieving its goals. So, diyan papasok si derivative because of the existence of this risk. Yan kasi maganda sa ang maganda kasi derivative kung ma-discuss sa personal. Kasi mas madali siyang ma-explain kapag personal na din discuss sa'yo kasi magandang topic to sa derivative sa pag-explain. Kaso wala tayong choice, online class tayo. So now let's go to derivative. Now, ang derivative, isa tong financial instrument. So yun, no? This is a financial instrument or other contract na kung saan it derives its value from the changes in value of some other underlying asset or other instrument. O yun, no? From the word itself, derivative. Yung value niya nanggagaling sa other things. Yung value niya nanggagaling, nakadepende sa ibang bagay. Kaya nga, derivative, it derives its value from other things. Kaya nga derivative ang tawag. Like for example, okay, ikaw, ang tingin mo sa sarili mo, ang pag-value mo na sa sarili mo, nakadepende sa kung anong tingin sa'yo ng ibang tao. So in that case, yung derivative value mo, nakadepende sa tingin sa'yo ng ibang tao. Pero masama yun, di ba? Dapat ang pagtingin mo sa value ng sarili mo is nakadepende sa kung anong tingin mo sa sarili mo. Pero ganun ang example natin. Yung value mo sa sarili mo nakadepende sa pagtingin sa'yo ng ibang tao. So yan, derivatives mo, yung value mo, na kung saan yung value na yun, it derives, nakadepende sa underlying asset, kung ano yung tingin sa'yo ng ibang tao. So yan, derivatives. It derives, ulitin natin, it derives its value from the changes in value of some underlying asset or other instrument. Now, these are the characteristics para sa isang derivative. Yung value niya changes in response to the change in the underlying. So, ibig sabihin, kapag tumaas yung value ng underlying, tataas rin yung value ni derivative. Kung bababa yung value ni underlying, baka bababa rin yung kay derivative. Pangalawa, derivatives does not require initial net investment. Or kapag needed man, very minimal initial net investment. Usually to, minimal initial net investment sa option contracts to. Pero later na yun. Pero generally, hindi niya kailangan. Hindi kailangan ng initial net investment. So makikita nyo, pag mga no entries yan parati. Pero pag kailangan ng minimal, lalo na pagdating sa option contracts, yan, meron yan minimal initial net investment. And lastly, it is settled at a future date. So yan yan yung tatlong values ng derivatives at tatlong characteristics ng isang derivatives. Ito, value changes, depende sa changes or in response to the change sa isang underlying, requires no initial investment. Kapag kailangan man, very minimal. And it happens in option contracts. Ito. And lastly, sinisettle siya sa future date. Now, ano ba ang purpose ng derivatives? Bakit siya nag-i-exist? Anong purpose niya sa buhay? Ito. Dalawa. To speculate and to hedge. Anong meaning yan, sir? Like for example, dito. Sa speculate. Ano ba magandang example dito? Yun, sa Bitcoin tayo. Di ba? Cryptocurrencies. Ngayon, nag-speculate ka. Nag-invest ka sa Bitcoin. Speculating na tataas yung value nun. Pero may risk doon na baka nag-invest ka ng 100 million, yung risk doon na baka bumaba ng below 100 million yung magiging value ng investment mo. So that is speculating na okay, sige, mag-invest ako sa Bitcoin, 100 million. So nag-invest ako sa Bitcoin, I'm speculating, expecting na tataas yan. But doing so, pumapasok ako sa isang risk. I'm incurring a risk na instead na tumaas yung value ng investment ko, bababa siya below 100 million. So that is speculating. Na sir, anong derivatives yan? Tandaan nyo, yung 100 million na ininvest, yun yung, tawag dito? Yun yung, dapat later ko pa sinabi yun eh. Yun yung, tawag dito? Notional amount. Dapat nga, dapat later ko pa sinabi tong purpose. Pero basta get nyo na, ganito yung ano nyon. Pero kasi may mga definitions pa yun later eh. Pero ganito yung purpose ng derivatives. To speculate, to incur risk. Ito naman, to hedge, to avoid or manage risk. Paano yan, sir? Ito ang maganda sa derivatives. To hedge or to manage a risk na ganito. Example lang. Pero marami nito examples dito. Pero ito lang, simple example. Sa future, gusto mong bumili ng isda. Pero ang problema, nangangamba ka. Na baka yung presyo ng isda ngayon, pagdating sa future, tataas. Nangangamba ka sa risk na pwede yung mangyari. So, in order to avoid that or at least manage that risk, to minimize that risk, pumasok kasi isang kontrata na kung saan ang sabi mo, next week bili ako isda sa'yo, 100 pesos per kilo. So, yun yung ibenta mo, yun yung isingil mo sa akin, yung ibenta mo sa akin, pagka next week 100 pesos per kilo. So, yun, nagkaroon na kayo ng agreement. Ngayon, pagkadating ng next week, Diyos ko, yung presyo ng isda naging 120 per kilo. Pero para sa iyo okay lang kasi may nakausap ka na bibilin mo sa kanya by 100 pesos per kilo. So yun, you were able to avoid the risk or manage the risk. Kaso meron ding instances na 100 pesos kontrata nyo. Di ba? So yan, to hedge, manage, avoid risk. So yan, mga simple simple examples. Tawag dito? Nakalimutan ko. Wala. Simple examples lang yan. Kasi later on, lalo na dito sa 4. Sana yun? Yung 4. Saan yung 4 na mention ko? Lalo dito sa 4, marami na examples dito. Ayun. Ito sa underlying pati si notional amount. Okay. Napag-usapan natin si underlying, di ba? Ano tong si underlying? Ito, mas broad na definition niya. Ang isang underlying is a specified price, rate, or other variable. Example given, yung interest rate, security or commodity price. Like, yun, gaya sabi natin, yung 100 pesos na isda. Excuse me po. Foreign exchange rate, 40 pesos per peso, ganun. Index or prices or rates. Index of prices or rates. And etc. It also includes scheduled event like payment under a contract that may or may not occur. Pagdating, gaya ng option contract, di ba? May option ka na bumili or hindi bilhin. Now, on initial date of transaction, ang derivative, which is the financial statement or the contract, financial instrument or the contract, normally entails no cost or an initial net investment that is smaller than would be required for other types of contracts that have a similar response to change in market factors. So, ngayon pa lang sabihin ko na, ito di ba yung or an initial investment that is, may example pala later on yun. So, changes in market factors, thus, most derivatives are not recorded at the date of initial. Ito, na-mention naman natin eh. Since generally, most of the time, walang kailangang net initial investment or initial net investment, so walang recording yan. Pero pag mayroong kailangan small amount, okay, may recording ka. Usually, it happens pagdating sa mga option contracts. So, yan. Yan si underlying. The specified price, rate, or other variable. Ito naman. Now, after initial date of transaction, yun na, na kayo. The value of a derivative is determined by multiplying or other arithmetical interaction like ipa-plus mo, i-divide mo, or i-minus mo, subtract mo, the notional amount by the underlying. So, may gagawin ka dyan. Either multiply mo sila, add, minus, or divide, depende sa sa specifics ng problem. So, kailangan mo talagang i-analyze yung problem. Anong gagawin mo? Kay notional amount o kay underlying, i-multiply mo ba agad-agad? Hindi, tingnan mo muna yung problem. Kasi may mga instances yan, baka kailangan mo silang i-minus, baka kailangan mo silang i-add. So, yan, understand the problem. So yan, after initial date of transaction, yun yung mangyayari. Si notional amount, yung mga interest rate, yung 12% per annum, security or commodity prices, 100 pesos per kilo ang isda, foreign exchange rate, 50 pesos per $1, ganon. Now, with that, a notional amount is a specified unit of measurement. Example, ganyan sabi natin, number of currency units. Yeah? Number of shares, 1,000 shares. Tapos ang ilalagay mong underlying, 50 pesos per share. O yun. Yeah? Notional amount, 1,000 shares. Underlying, 50 pesos per share. Market price niya. Bushels, pounds, etc. O kilos, di ba? Yung isda, 100 pesos per kilo. 100 pesos per kilo. Yung notional amount mo is per kilo. Yeah? For example, the value of a derivative after initial recognition is determined by multiplying the agreed number of shares, notional amount, by the change in the market price of the shares. The change in the market price. Let's say, for example, nung date of transaction, goods, 50 pesos per share. 50 pesos per share yung yung value ng shares. Then, after 1 month, naging 60 na. Yun, yung multiply mo. Yun yung hanapin mo yung difference. So, basically, ang underlying, ito yan siya. Tandaan nyo yung difference sila. Notional amount, yung specified unit of measurement. Okay? Ito, number of currency units. Tandaan nyo yung difference sa underlying kay notional amount. Ngayon, ang derivative is an executory contract. Yeah? If you can still remember your oblicon, ang executory contract, ibig sabihin, a contract that is not yet executed and performance is yet to be executed in the future. Kasi pag executed contract na yan, ibig sabihin, nagawa na ng mga parties yung kanilang obligation or there's a substantial performance already. Pero pag executory, wala pa. Or wala pang substantial performance. So, a derivative involves exchanges of promises between the contracting parties. The future settlement or execution of which depends on whether the value of an underlying will go up and down or will go up or down. Now, when we use it to manage risk, the buyer of a derivative instrument forgoes potential gains in exchange for security over potential losses. So, yan yung managing a risk na example. Yung example natin kanina na yung isda, bibili mo 100 pesos per kilo sa future. So, kahit na mag-fluctuate yung presyo ng isda sa market, sa future, pagdating ng specified date, 100 pesos pa rin yung mabibili mo. 100 pesos pa rin yung babayaran mo. So, kahit na maging 80 yan, which means parang nakatipid ka, or pag nag-80 yung nakatipid ka, which is, pag naging 80 yan, sa future, pero ang babayaran mo 100, so, yan? You're foregoing the potential gains na nakatipid ka sana ng 20. Sayang. You need to forgo that potential gains in order to secure yourself over potential losses. Like for example, sa future, naging 120 per kilo yan. 100 lang yung record mong bayaran. Swerte ka. So, yung potential gain na yun, pinurgo mo na, binitawan mo na. Para ma-make sure mo na maiiwasan mo yung potential losses. Yan yung sa manage risk. Yan yung sa manage the risk. Which is one of the reasons bakit tayo may derivatives. Yeah? Ganon yung nun. Ganon yung concept nun. Yung sa speculating naman, gaya na sabi natin. Saan tayo dito? Ito, example ni Zeus, your mama. Mama, just kill the man. So, your mama promise to give you a gold necklace as a gift kapag na-pass mo yung board exam. You don't want the necklace because it doesn't look good on you. Choosy. You would rather sell it to buy some girly stuff you've been dreaming of all your life. Let's say the value of the gold necklace is 100 million. Yun. Which is more than sufficient to buy the girly stuff. Now, you are worried about the possible future price fluctuation in the value of the necklace. But not in passing. Loko to si Lusa. If that happens, your proceeds from selling the necklace might not be sufficient to buy your girly stuff kasi baka bababa yung value ng necklace mo from 100 million naging 96 na lang, naging 95 million. So in order to make iwas of that risk, if that happens, your proceeds from selling the necklace might not be sufficient to buy your girly stuff, you will feel devastated, depressed, very sad, and lonely. So in order to manage the risk na 100 million pa rin yung marireceive mo sa future, pumasok ka sa isang kontrata with your papa. Parang si Boyle man to, naalala ko dito. If the value of the necklace falls within below 100 million after the board exam, then si papa will pay you the deficiency. On the other hand naman, if the value of the necklace increases above 100 million, then yung excess ng 100 million, bibigay mo kay papa. So yan. With that, you are entering into a contract of derivative with your papa. Because it has all the following characteristics na napag-usapan natin. So, una, yung value. Its value changes in response to the changes in the value of the necklace, the underlying. Ay, lumampas tayo. Si necklace yung underlying. Tandaan natin ulit, ano si underlying? It is the specified price, rate, or other variable. Gaya ng, dito, index prices or the security or commodity price of the necklace, which is 100 million. Which is 100 million. In which the notional amount is 100 million. So, yung underlying mo, okay, is the necklace. Or the scheduled payment under a contract. Saan tayo dito? Now, the derivative is measured as the excess or deficiency of the value of the necklace over the agreed price, which is the notional amount. From the word itself, the amount. Okay. The notional amount. So, ito rin. Pangalawang natin, there is no initial investment kasi pumasok ka lang sa agreement with your papa. Wala kayong binayaran. Wala kayong bayaran. Nag-agreement lang kayo. Pag tumaas to, over 100 million, bigay mo sa akin yung excess. Pero pag bumaba below 100 million, bigay mo sa akin yung deficiency. So, and the contract is set at a future date. So, the underlying is the value of the necklace, the commodity price. The commodity price. The notional amount is 100 million. Number of currency units. Saan yun? Number of currency units. So, the amount at which the underlying is compared with to derive the value of the derivative. So, anong value ng derivative natin? Nakapas ka sa board exam and just like you have predicted, the value of the necklace decreased. So, 96 million na lang. Yan yung kinakatakutan mo the future. Yan yung reason. Bakit ka pumasok sa isang contract with your papa? Because you want to manage the risk na bumaba yung value ng necklace mo below 100 million. So, nangyari yung kinakatakutan mo. But since pumasok ka sa isang derivative contract with your papa, naiwasan mo, na-manage mo yung risk na yon. Paano? Kasi pag bumaba below the 100 million, the papa will pay you the deficiency. So the value of the derivative is computed as follows. Notional amount, specified unit of measure, the underlying current value of the necklace. Current value of the necklace. So with that, yung value of derivative mo, yung collectible mo galing kay papa is 4 million. Ayan, mas naging klaro ang concept ng derivative. Di ba? Sabi natin, ang value ng derivative is nakadepende sa changes or in response to the changes of the underlying. In this case, the underlying is the value of the necklace. At this time, the value of the necklace was 100 million. Pero bumaba yung value ng necklace to 96 million na lang. So yung value of derivative mo, yung magiging collectible mo papa is 4 million. And as you can see here, Sabi dito na after initial date of transaction, the value of a derivative is determined by multiplying or other arithmetical interaction between the notional amount and the underlying. In this case, ang nangyari between the notional amount and the underlying is dinidak mo. Kasi yung notional amount mo was 100 million. Tapos yung underlying mo, which is the basis, which is the basis for the value of your derivative, naging 96 million na lang. So because of that changes sa value ng underlying mo, ang derivative natin, di ba? Ang value niya nagre-response sa value ng changes in value of the underlying. So in this case, yung value of derivative mo is 4 million. Di ba? Nagkaroon ng changes sa underlying, so in response, ito yung naging value ng derivative mo, collectible from Papa. Sir, what sir if na itong collectible from Papa, receivable mo to, di ba? Sir, what if yung underlying naging 105 million. Tumaas yung value ng necklace, naging 105 million. So, anong scenario yan? Ibig sabihin, yung magiging value of derivative mo is 5 million. Ngayon, yung excess na yan, hindi na yan collectible, but rather payable mo na to Papa. Kasi di ba ang pinagkasunduan mo, pag tumaas, nag-increase above 100 million yung value ng necklace, you will pay the excess to Papa. So yun yung magiging value ng derivative mo, 5 million. Kapag nag-increase to 105 million yung valuation ng necklace. So yan yung derivative natin. 5 million. Pag gano'n yung nangyari. But in this situation, 4 million. Okay? Ang 4 million, kaya yung nangyari because it responded to the changes in the value of the underlying. Na yung underlying natin from 100 million naging 96 million. Kaya nagkaroon tayo ng 4 million. Kasi balikan natin. A derivative is a financial instrument or a contract or other contract that derives its value from the changes in value of some other underlying asset, yung necklace or other instrument. Yan yung derivative natin. Nakadepende yung kanyang value, depende sa kanyang pag-respond sa changes sa value ng isang underlying asset or underlying instrument. So you then sold the necklace to Papa for 96 million, collected 4 million, and used the 100 million. Notice that when you use derivative to manage the risk of price fluctuation, you were playing safe. You were playing safe eh. You waive your right over possible gain kasi may chance na, di ba? May chances na itong 100 million necklace mo, tumaas ang value to 110 million. May chances yung mangyari. But also, may chances din na yung 100 million necklace mo, bumaba ang value to 96 million. So, instead of speculating, instead of incurring risk, you have decided na i-manage mo na lang yung risk na yun. You will play safe. Na in the future, gusto mo, 100 million ang matanggap mo. Kahit anong mangyari, 100 million. So, yan, pumasok kasi isang derivative contract. That is managing the risk. That is one of the main purpose or the primary purpose basically of a derivative. Kaya nandiyan yan sa nag-exist. Because companies, instead of gambling, instead of speculating, they would rather play safe. They would rather want to avoid or at least manage the risk instead of speculating. Instead of i-put pa nila into danger yung existence ng company nila. Kaya nandyan si derivatives. Ito example tayo. Example 1. Dami tayong example, no? Kasi kailangan talaga itong maintindihan tong derivatives. So, example 1. Nag-purchase ka ng call option from Mr. Monkey. The option gives you the right to buy banana for 5 million. Ngayon, if you can still remember, 'di ba, sa inyong sales sa inyong loan sales agency, law on sales, di ba? May tinatawag tayong option money. Ha? Yung option money or option contract, it does not give you or it does not oblige you to buy the commodity. Yeah? It does not oblige you to buy the commodity. It only gives you the right to choose, the right of option to buy or not to buy. Di ba yun yung option contract? It only gives you the right to choose kung bibili ka ba o hindi. Binibigyan ka lang yan ng option. Na yung binayad mo sa option na yun, yun yung pinipertain natin as minimal initial net investment. O yun. Kapag pumasok ka sa isang option, ito, options, magbabayad ka ng option money. Pag nagbayad ka ng option money, then nagbayad ka ng initial net investment. Pero minimal lang yan siya. Yan yung pinipertain natin. Now in this case, nagbakal ka ng call option from Mr. Monkey. Na the option gives you the right to buy banana for 5 pesos, which is the strike price or the exercise price. Na pagdating sa future, if you are willing to exercise your option na gusto mo bumili ng banana, then kahit na ano pa yung value sa market ng banana na yan, 5 pesos lang yung babayaran mo. Kasi yun yung option mo eh. Yun yung sa option contract mo. Na kahit na maging 100 million, kahit na maging 100 pesos, 50 pesos or piso, yung value ng market price ng banana sa future, pero since may option contract ka na gives you the right to buy the banana for 5 peso, 5 peso ang babayaran mo. Kaya strike price or the exercise price. To case number 1. Nung exercise date, kung kailan kailangan mo nang pumili, mag-choose, mag-decide kung bibili ka ba ng banana kasi 'di ba? Option lang 'yan eh. Option to buy, option to purchase. It does not oblige you to purchase. It only gives you the right to choose kung gusto mong bumili o hindi. Okay? May difference 'yan ha. So dito pagdating ng exercise date, yung cost ng banana sa 7-Eleven 12 pesos. So mahal ang banana sa Manila. Kumakain kami sa karinderya o bili kami sa 7-Eleven. Ang mahal ng banana, 15 pesos isang banana, isang saging, mahal. Punta tayo sa ibang topic. The option is in the money. The banana cost 12 peso. So as you can see, at the exercise date, kahit na 12 pesos yung cost ng banana, yung market price basically, sabihin natin, kapag gusto mong bumili, ang babayaran mo pa rin is 5 peso. Kasi yun yung sa option mo eh. So, that is an option that is in the money. Ibig sabihin, it is advantageous to you. And with that, you will basically be able to save 7 pesos by buying from Mr. Monkey. Kasi 12 pesos yung sa market, pero mabibili mo lang siya at 5 peso. So, you were able to save 7 peso. Another example, yung banana, 3 pesos na lang sa 7-Eleven. This option is out of the money, which basically means it is not advantageous to you. Kasi, kung bibili kay Mr. Monkey, bothered na kayo, no? Monkey sinasabi ko. Kay Mr. Monkey, 5 pesos yung babayaran mo. Pag kay 7-Eleven lang, 3 pesos. So, anong pipiliin mo? Will you exercise your option to buy the banana from Mr. Monkey? Na ang babayaran mo 5 peso? Or kay 7-Eleven? Tandaan nyo, hindi ka obligado na bumili ng banana kay Mr. Monkey. You are only given the choice, the right to choose kung bibili ka o hindi sa kanya. Naku sa'yo, wag mo nang i-exercise yung right na yon. Bumili ka na lang kay 7-Eleven kasi 3 peso lang sa kanya eh. 3 piso lang. Kung kay Mr. Monkey ka bibili, 5 pesos. Mahal. Diba? Ito, example number 2. Dito naman, ikaw yung nagbibenta. So, you purchase a put option. Kasi dito, pag ikaw yung bibili, call option yan. Dito, pag ikaw yung magbibenta, ikaw si seller, put option ang tawag. So, you purchase a put option from Miss Banana. So, yun. This option gives you the right to sell a monkey for 1,000 peso. So yun, no? So kahit man ano mangyari sa future, kapag gusto mong ibenta yung monkey na yan, kahit na maging 2,000 yan sa 2,000 pesos ang value sa future or 500, ibibenta mo yan at 1,000 peso if you exercise your right to sell that monkey. So sa case number 1 at exercise date, the monkey is being sold for 800 peso sa market. So anong gagawin mo? The option is in the money. Kasi, tingnan mo. Sa market, binibenta yan at 800. Pero ikaw, pwede mo yung mabenta at 1,000 kapag i-exercise mo yung option mo to sell that monkey or monkey. Kasi sa market, kapag sa market mo ibebenta, 800 lang yung marireceive mo seller ka. Pag i-exercise mo yung right mo sa option na 1,000 pesos yung marireceive mo, the goods. So that is an option in the money. It is advantageous to you, kaya in the money. Because you will gain 200 pesos from selling the monkey to Miss Banana. Ngayon, on the other hand, kapag at the exercise date, nagko-contemplate ka na kung ibebenta mo ba yung monkey for 1,000 peso kay Miss Banana, nakita mo na yung monkey is being sold for 1,500 sa market. Inisip mo, kapag ibebenta ko to kay Miss Banana, 1,000 lang marireceive ko. Pero pag ibebenta ko to sa market, 1,500 ang marireceive ko. So, yung option na yon na ibenta kay Miss Banana yung monkey is out of the money because it is not advantageous for you. So, you are better off selling the monkey to the market. So, yan ang difference sila. Kapag in the money, advantageous sa'yo. Out of the money, hindi advantageous sa'yo. Nakadepende rin yan kung ikaw yung buyer, ikaw yung seller. Ngayon, like the other derivatives, options may be settled through net cash payments. Paano net cash payments, sir? Ito usually yung ginagawa na lang namin pag na-discuss na yung derivatives. So net cash na lang, mas madali pa yung solving. Pero later on pa yun. Like for example, sa number 2, case number 1, to. The option is in the money. However, you don't actually own a monkey to sell. So, to settle the option, Miss Banana pays you the net difference of 200 peso. Ganyan usually nangyayari. Yung mga option na yun. Na instead na magkaroon pa sila ng record na magkaroon ng exchange on your part, yung difference na lang yung net difference na lang yung babayaran nila para mas madaling recording. Later on, makita nyo. If the option is out of the money, no cash settlement is required because the option gives you a right, not an obligation. Gaya na sabi natin, option contract yan Ang option contract, ulitin natin. Anong option contract, di ba? It only gives you the right to choose kung i-exercise mo kung ano man yung stipulated sa option. In this case, sa example number 1, the right to choose kapag bibili ka ba o hindi. Ito sa number 2, the right to choose kapag ibebenta mo o hindi. Nakadepende sa'yo kung exercise mo yan. Hindi ka pwedeng pilitin, obligahin. Wala kang obligation na mag-exercise. Choice mo yun kung gagawin mo o hindi. So ito dito tayo sa common types of derivatives. Ilan to sila? 7 to sila pero usually 4 lang yan na primary dyan. Ito, forward contract which will be our discussion for the next chapter. Forward contract is an agreement between two parties. Kung saan yung agreement na yun is for them to exchange a specified amount of commodity, security, or foreign currency at a specified date in the future at a pre-agreed price. Yan sabi natin. Kakausapin mo si Manong tindero ng isda na sa future na Manong, 100 pesos per kilo bili ko sa isdaan next week. Payag si Manong, yun, may forward contract kayo. Kasi, may pinag-usapan kayo na mag-exchange kayo ng specified amount of commodity, security, or foreign currency at a specified date in the future. Commodity isda. Bibili mo sa kanya at 100 pesos. That is the pre-agreed price. Next week, in the future. So, kahit man magkaroon ng fluctuation sa presyo ng isda, in the future, pagdating ng date of the 100 pesos pa rin yung pre-agreed price yung babayaran mo. So yan si forward contract basically. Now itong futures contract. Ano to song futures contract na to? Si futures contract, ito forward to, tandaan yung difference sila. Forward contract to. Itong si futures contract, this is a contract traded on an exchange that allows an entity to buy or sell a specified quantity or commodity of a financial security at a specified price on a specified future date. Now, if some of you are if meron sa inyo following the market or business news, aware kayo na na yung oil, it is a commodity that is being used sa isang futures market contract. Oo, like for example, sa futures contract na yan, nakalagay na kung sino man may hawak ng contract na to shall have the right to purchase 2 million barrels of oil for 4 million peso next year. Yun yung nakalagay sa futures contract. So ngayon, yan yung tinitrade nila Tinitrade nila. Yung karapatan na yun, yung right na yun to purchase 2 million barrels of oil for 4 million dollars. So, ang siste dyan, kapag tataas yung value ng oil, lugi ka kapag meron kang futures contract in relation to that. So, ibibenta mo. Pero kapag bumaba yung value ng oil, let's say yung 4 million, yung 2 million barrels, naging na lang, paano ba? Let's say ganito na lang. Let's say na meron kang nakuhang futures contract which states that you have the right to buy 2 million barrels of oil for 4 million dollars. Yun, sabihin natin ganun. So, yun, may hawak-hawak mo yung futures contract na yun. Ngayon, pagdating sa future 2021, let's say na dumating na yung specified future date Specified price mo is 4 million for those 4 million pesos for those 2 million barrels of oil. Tumaas yung value ng oil. Na yung 2 million barrels, ang equivalent niya na is 6 million 6 million dollars. Na, swerte ka. Kasi, yung futures contract mo, it only provides na 4 million dollars lang yung babayaran mo for those 2 million barrels of oil. Nakachamba ka, nakatipid ka ng 2 million dollars. Ang magiging problema dyan, kapag sa future, in another scenario, yung 2 million barrels of oil, 3 million na lang yung halaga niyan. Na malas ka. Kasi, yung right mo para bumili ng 2 million barrels of oil na yan, kapag i-exercise mo, 4 million yung kailangan mong bayaran. So parang parang forward contract rin siya, Pero ito, si futures contract, it is traded on a market. Oo, marami yan sila. Usually, ang pinaka good example dyan is yung oil Like, yung gaya na sabi natin, yung sa isang future contract, nakalagay doon 2 million barrels of oil for 4 million dollars, iti-trade yan nila. Tapos, yung value niyan nakadepende sa fluctuation ng price ng oil. Kung tataas bang price ng oil or bababa. Di ba? Another commodity that is also part of the futures contract na tinitrade nila is tubig. Oo, kakapasok lang. Na yung water, ginawa na rin nilang commodity na tinitrade nila sa futures contract. Ngayon, baka yung iba sa inyo nalilito pa anong difference ng forward contract sa futures contract. Kasi pareho sila, di ba? May pagkapareho sa kanila na pareho silang may commodity na kung saan ibebenta sa future at a specified date na kung saan there's a pre-agreed price specified na. So anong difference silang dalawa? Ito. Yung forward contracts is basically a private contract which are most likely over-the-counter transaction. Gaya na sabi natin yung pagbili ng isda. Di ba? Private yun, between you and the fisherman. Pero yung futures contract, these are futures, yan yung tawag natin sa kanila, traded in the market. Na kung saan yung futures contract ngayon, tinitrade nila, like yung sinong gustong bumili ng futures contract na may 2 million, gives you the right to buy 2 million barrels for 4 million dollars. Trade yun nila. Forward contracts are usually customized. Depende yan sa agreement ng parties. Kaya kung anong stipulations ang gusto nila. Pero pagdating naman sa futures contract, standardized yan. Kasi nga, kailangan standardized yan kasi tinitrade mo yan sa market eh. So dapat yung formatting yan, pare-pareho lang. Para mas madaling matrade. Pangalawa, ito gaya sabi din, forward is contract between two private parties who interact directly with each other, ikaw and the fisherman, for example. Sa futures contract, since traded yan sa market, there's the party in a futures contract may never know the other contracting party because they interact indirectly through a broker kasi sa market ngayon. Eh. Para siyang stock exchange natin eh. Pero this for the futures contract. Okay, so kung gusto nyo, search nyo yun. Marami ang example sa futures kung lalo sa mga movies na papanood mo. And lastly, forward contracts may be settled to the actual delivery of the agreed upon commodity or net cash payment. Sa futures, normally settled through net cash payments. So sir, ganun ba yan sir? Oo. Usually ito yung nangyayari. Kahit na may karapatan kang bumili ng 2 million barrels of oil for 4 million peso, it does not necessarily mean na bibili ka talaga ng 2 million barrels of oil for 4 million peso kapag favorable sa yung condition. Oo, hindi ganun usually nangyari. Parang market para talaga sang stock exchange eh. Kapag nakita mo na favorable na sa yung pricing ng oil, o ibebenta mo na yung futures contract mo sa market para maka-receive ka ng net cash payment. O di ba? Parang kalokohan lang no. Bibili ka ng futures contract to give you the right to buy oil. Tapos pag favorable na yung market sa'yo, ibibenta mo na lang yun para maka-receive ka ng net cash payment from your investment. O, parang ganun. Kasi it does not necessarily mean na kung may ganun kang futures contract, pagdating bibili ka talaga ng oil. Hindi. Before the reaching of the specified date, iti-trade mo yan kung favorable na yung pricing sa'yo. So, para rin siyang trading ng stocks. Another common type of derivative is the option. As you know, option, di ba? Pag it does not necessarily mean it only gives you the right to choose kung i-exercise mo ba hindi. It does not give you the obligation. It does not oblige you, I mean. So option is a contract giving the holder the right to the right but not the obligation to buy or sell an asset at a specified price at any time during a specified period in the future. The right lang. Ilan beses na mention eh. When the holder exercises right, the writer of the option is obligated to perform his obligation on the option contract. Kapag i-exercise niya. Now, these are the types of option na ito na mention natin. As to the right of the holder, yung holder, yung taong magdi-decide kung i-exercise niya yung right o hindi, Yan yung si holder. Call option, an option to buy. Put option, this is an option to sell. Ito, for example, para mas maganda yung presentation. Type of option, the option to call, kung saan bibili ka. Titingnan mo kung i-exercise mo yung right to buy mo o hindi. Put option, ito yung klase ng option na kung saan titingnan mo if you will exercise your right to sell. Ngayon, kapag yung strike price mo, which is the exercise price, to which the exercise price is equal to the market price, then it is at the money. Wala kang gain, wala kang loss kapag i-exercise mo yung option mo. However, if the exercise price is less than the market price, kasi strike price, market price, kapag call yan, it is in the money. Kasi, basically, yung babayaran mo, mas maliit compared sa market price. So, nakatipid ka, may savings ka. Pero kapag ikaw yung magbebenta, tapos yung exercise price is mas mababa sa market price, lugi ka. Kasi isipin mo, bakit ko to ibebenta sa kanya? Kung ibebenta ko to sa market, mas malaki yung marireceive kong ginansya. So that is out of the money. That is disadvantageous to you pagdating sa selling, sa put option. Ngayon, ito naman another scenario. strike price is greater than the market price. Ibig sabihin yung exercise price mo sa option, mas mataas compared sa kung ano yung price na nasa market. So kapag call option yan, kung saan it is the right to buy, the right to choose kung bibili ka, lugi ka. Iisipin mo, Diyos ko, kapag bibilihin ko to, mas mahal yung babayaran ko as if compared sa kung sa market ako mismo bibili. Mas makakatipid ako kung sa market ako mas bibili. So that is an out of the money disadvantageous sa'yo. On the other hand, sa put option, sa selling, ikaw yung magbebenta. Kapag mas mataas yung exercise prices compared sa market price, swerte ka. Kasi kapag ibebenta mo doon sa counterpart mo, mas malaki yung magiging ginansya mo as compared sa kung ibebenta mo sa market. Kasi may option ka may right ka to sell the commodity at the exercise price. Karapatan mong pumili yon. So with that, that is an in the money advantageous sa'yo. So yan, no? Para mas madali yung presentation nila. Ito namang swap. This is a contract in which two parties agree to exchange payments in the future based on the movement of some agreed upon price or rate. Common examples include ito, si interest swap and si foreign currency swap. Mas maganda to sila excuse me po, mas maganda to silang ma-explain kapag may example. Kasi baka mahilo kayo kasi may mga tatawag tayong fixed interest rate and variable interest rate. Foreign currency swap. Interest swap and foreign currency swap. Ito naman mga basically other stuffs to. Yung caps floor, etc. Swap option. It has both the characteristics of an option and swap. Ito naman weather derivative. Contract that requires payment based on the climatic, geological, other physical variables. Sir? Nagiging derivative ang weather? Kung ano nangyari sa weather? Oo, may mga instances yan. Anong mga instances, sir, na nagiging relevant yan? Like for example, you're an agricultural business owner. Agriculture yung business mo. Tapos ngayon namomblema ka. Bakit? Kasi this incoming summer, baka magkaroon ng drought na baka maapektuhan yung business mo. So with that, pumasok ka sa isang kontrata na kung saan stipulated, kapag nagkaroon ng drought by this summer next year, may marireceive kang ganitong payment. Kapag hindi nagkaroon ng drought by summer next year, babayaran mo. O di ba? Babayaran mo yung counterpart mo. So that is a weather derivative. Nakadepende sa kung ano mangyayari sa weather, sa climate, yung yung magiging payment mo. Kung magkakaroon ka ba ng collectible asset or magkakaroon ka ng payable asset. Depende sa weather. Meron din yung based sa rain. Oo, kasi pag example, nagkaroon ng drought. Nagkaroon talaga ng drought. You're fearful na magkaroon ng drought. Diba? O at least, meron ka pang in which it affects your business kasi agricultural ka . O at least, kapag nagkaroon ng drought, yung weather derivative na pinasukan mo, may marireceive ka from that. Kasi nag-speculate ka na magkakaroon ng drought or basically parang in-avoid mo yung risk nag-manage ka. Now, sir, what if hindi nagkaroon ng drought? O at least, yung kikitain mo galing sa galing sa agricultural business mo, yung pababayad mo sa weather derivative na yun. Kasi ang pinasukan mo lang naman is if ever nangyari yung kinakatakutan mo, at least na-mitigate mo yung risk. Yun naman yung point doon . Minsan, yung iba pa sa mga weather derivative niya is when it comes to rain, search sa internet, meron yung mga ganyan. So yan, purpose of derivatives, ito, to speculate, incur risk, and to hedge. Yan, hedging is to avoid the risk or manage the risk. You are hedge, di ba? Iniiwasan mo, ina-avoid mo. Dito ngayon tayo sa pag-measure ng derivative. So, napahaba tayo. Mahaba tong wala. So, measurement of derivatives. So, all derivatives paano natin mini-measure ang derivatives? Sabi dito, all derivatives are measured at fair value. Yun ang pag-measure natin sa derivatives. Now, the accounting for fair value changes depends on on whether the derivatives or whether the derivative is either sa tatlong to. Kapag not designated as hedging instrument, na designated as fair value hedge, or designated siya as cash flow hedge. So nakadepende yan kung paano mini-measure sa fair value ang isang derivative. Ngayon, ito, let's talk about to not designated as a hedging instrument. Na pag siya, hindi siya designated as a hedging instrument, meaning it is held for speculation. Bakit? Kasi itong hedging instrument na to, without going to the next slides, basically, itong hedging instruments na to, it exists in order to offset any adverse effect na pwede mangyari sa ginawa mong investment. So, ganun lang yung hedging instrument. Hedging instrument. In this case, since wala kang designate na hedging instrument, then it means that you are not trying to manage risk. You are not trying to avoid risk. You are not trying to mitigate risk. You are not trying to offset the risk. So, in that case, anong tawag doon? You are speculating. Hence, kapag hindi ka mag-hedge, hindi mo balak mag-hedge, ang balak mo, ibig sabihin nun, mag-speculate. You will incur risk kasi you're speculating. You're gambling basically na pag nag-invest ka dito, yung value ng investment mo tataas. Kasi yung risk doon is, baka yung value ng investment mo, mababa. Kaya doon, walang manage ng risk. Ikaw na mismo alam mo yung incurring risk for the possibility na yung investment mo tataas. Speculation tawag doon. Now, derivatives not designated as a hedging instrument are accounted for as held for trading securities. So, ito yung nasa stock market natin, PFRS 9. Accordingly, and the fair value changes are recognized sa profit or loss, o FVPL, fair value profit or loss. So, held for trading securities. Ito yung basically nasa stock market natin, di ba? So, yan, kaya held for speculation. Na you're risking, na you're speculating, basically you're gambling na yung investment mo tataas. But in relation to that, meron ding risk, mag-apply yung risk na baka yung investment mo bababa yung value. Yun na, hedging. Wala kang hini-hedge, wala kang minimitigate na risk, wala kang ina-avoid, wala kang ina-offset, wala kang minamanage. Ginagawa mo lang yan for speculation purposes. Ngayon, let's go to hedging. Ngayon, itong si hedging, dito, nagmamanage ka na ng risk, nagmimitigate ka, ina-avoid mo, ino-offset mo. Yun na yung ginagawa mo. Para yung risk, hindi masyadong maka-apekto sa'yo. So, hedging means designating one or more hedging instruments so that their change in fair values or cash flow assets in whole or in part, the change in the fair value or cash flow of the hedge item. So, as you can see here, may dalawa tayong tinitingnan. The hedging instrument and the hedge item. So basically, without going to the next slides, ang hedging meaning lang yan, meron kang dalawang pinasukang kontrata. Ito investment mo. Now, in order to mitigate, in order to offset, in order to manage, in order to avoid the risk in this investment, pumasok ka sa isang kontrata para ma-mitigate yung risk na yun. Para ma-mitigate to. Ma-avoid, ma-offset. So, yan yung sa hedging. Ganyan ang sa hedging. Ito investment mo, oh. Yan yung hedging. Yan yung basically idea ng hedging. May pinasuka kang investment. May pinasuka kang kontrata. Kaso takot ka. Ayaw mong mag-take ng risk. Gusto mo ma-mitigate yan. Kasi alam mo, pag nangyari yung risk na kinakatakutan mo, may detrimental, may negative effect yan sa company mo. So in order to avoid that, you need to mitigate, you need to offset. Oh? You need to avoid, you need to manage that risk. And how would you do that? One of the ways, mag-hedging ka. Itong investment mo, papasok ka sa another contract, another contract. Na kung saan, kung ano man mangyari sa contract na to, it will make sure na kung ano man yung risk na pwedeng mangyari sa investment mo, ma-offset, ma-manage. So yan yung idea ng hedging. Okay? So with that, meron, 'di ba nasabi natin meron tayong hedging instrument at meron tayong hedge item. So ano yan sila? Yan yung dalawang kontrata. Ito yan silang dalawa. Yan silang dalawa. So in this case, hedging instrument tayo. Ang hedging instrument, ano yan siya? It is a designated derivative. So yan yung derivative natin. Yung hedging instrument na yan yung derivative contract natin. Yan yung derivative financial instrument natin. Kung saan itong designated derivative na to, or the designated non-derivative financial asset or financial liability, whose fair value or cash flows are expected to, are expected to offset the changes. Big sabihin, offset the risk, manage the risk in the fair value or cash flow of the designated hedge item. Ma-manage dapat yung risk nito para ma-cancel yung risk. Yan ito si hedge instrument. Ito, hedge instrument. Ito naman si hedge item. Yan yung trabaho ni hedging instrument. Hedging. You are trying to offset the risk. Now, ang hedge item, it is an asset, liability, firm commitment, highly probable forecast transaction or net investment in a foreign operation that exposes the entity to risk of change in the fair value or future cash flows and is designated as being hedged. So, ito yung basically pinasukang investment ni company. Anong example nito? Ito sa asset. May pinasuka kang receivable. May matatanggap kang receivable from a transaction. Na gusto mo na matatanggap mo sa receivable na yon is 100 pesos. Pero since sa future mo pa yung matatanggap, there's a risk na baka mag-iba yung amount. So in order to offset the change in that amount, pumasok ka sa isang hedging instrument to offset the changes in the fair value of that hedge item. Same sa liability. May payable ka. Gusto mo, maintain lang yung payable mo. Na gusto mo 100 yung babayaran mo sa future. Kaso may mga problema baka mag-fluctuate yung prices. So in order to secure na gusto mo 100 lang yung babayaran mo, papasok ka sa hedging instrument to make sure na 100 lang yung babayaran mo. Yun yung meaning nun. Yun yung trabaho ni hedging instrument. To make sure na i-offset niya, i-avoid niya yung, i-manage niya yung risk na may incur mo due to the possibility dito sa hedge item mo. Yan yung trabaho ni hedging instrument. To make sure na kung anong gusto mong matanggap sa hedge item, yun ang matatanggap mo. Trabaho ni hedging instrument yun. Okay? Ito, mga additional notes na lang to. Generally, there are no restrictions, etc. Read na lang to. Designation, intrinsic value, itong time value. Diba? Sa time value of money, as you have discussed sa inyong management accounting, may effect yan siya. But for the purposes of this discussion, sa kahit na sa board exam, hindi na yung sinasama ang time value of money. Kasi pampadagdag tagal lang yun sa pagsosolve. So wala nang interest dyan. Kung present value ka pa. Kasi usually diretso na yan sa intrinsic value. So designation, only proportion, understandable, read. Sana tayo. Ito, designated single instrument. Wala naman yan. So, mga additional theories na lang to. Blackout tayo. So, pause muna natin ang video lang. Blackout. Kailan ako? Ay. Okay, ito. Nagbabalik tayo. Kakailaw lang. So, ito. Designating a combination of instrument. Okay, additional note lang yan. Ito. Kasi ito na pag-usapan natin hedging instruments. No restrictions, generally, etc. Derivative. No? Saan ito? External parties can be designated. Okay. Goods na. So, ito, dito naman tayo sa hedge items. Kasi di ba nasabi natin, ang hedging instrument, basically sa yung parang contract, na kung saan yung purpose sa buhay is to mitigate, offset, avoid, manage the risk na nangyayari or na pwedeng mangyari sa isang hedge item. Now, ano ba tong hedge item na to? Which na sabi natin kung anong nature niya. Pero ito, mga examples ng hedge items para mas maging klaro sa inyo. So, ito, a hedge item can be recognized asset or liability like recorded receivables or recorded payables such as, gaya na sabi natin, yung example natin, di ba? Gusto mo na yung marireceive mo is 100 pesos. Kaso sa future mo pa yung marireceive and there's a risk na magfa-fluctuate yung prices. So, baka bababa or tataas yung marireceive mong pera. Na gusto mo 100 na baka maging 150 or 80 na lang sa future. So, in order to mitigate, offset the risk that might happen, pumasok kayo sa isang hedging instrument para ma-mitigate yung risk na yun. Para ma-mitigate yung risk na pwedeng mangyari sa hedge item mo. Ito naman, unrecognized firm commitment, receivable not yet recorded on a future sale or payable not yet recorded on a future purchase commitment. So basically itong si firm commitment para siyang promise, parang promise, promise, parang contract to sell ba? Yeah? Na sa future, ibibenta mo to. Sa future, bibilhin mo to. Nagkontrata kayo, parang executory contract pa lang yan. Na nag-promise kayo na sa future, bibilhin mo to, or sa future, ibibenta mo to. Parang contract to sell, di ba? Ito naman, highly probable forecast transaction, a planned but not committed future sale or future purchase. Ito naman sa highly probable forecast transaction, ito yung mga usually customary transaction na ginagawa ng isang company. Na every week, throughout the years, every week, bumibili siya ng supply from the supplier. So kahit wala silang firm commitment or agreement or contract at the first place, but since it is customary na bumili siya ng supplies every week, so that is can be considered as a highly probable forecast transaction. Mga customary transactions, customary sales, or customary purchases. Ito naman, net investment in a foreign operation, a foreign subsidiary. Now dito, from this itself, alam nyo na may risk dito, di ba? Na yung fluctuation sa foreign currency exchange natin. So in order to mitigate those possible risks na mangyari from those fluctuations, so papasok ka sa hedging instrument. Ito na, mga additional definition. Gaya sa amin, firm commitment, binding agreement for the exchange of a specified quantity of resources at a specified price on a specified future dates. Ito naman, forecast transaction, o kagaya simple, uncommitted. Unlike sa firm commitment, may kontrata kayo, committed kayo. Dito tulad ng short mo, hindi committed sa'yo. Forecast transaction siya. Forecast transaction, uncommitted, pero anticipated future transaction kasi customary na ng customer na bumili sa'yo ng supply every week. So, ina-expect mo na. Foreign operation, net investment mo, etc. etc. Ito, hedge accounting. Now, in hedge accounting, we recognize the offsetting effects on profit or loss. Changes in the fair values of the hedging instrument and the hedged item. So, yun yung nangyayari dito. We recognize the offsetting effects. Like, for example, yung loss mo sa hedge item is 100, pero yung nagkaroon ka ng gain sa hedging instrument, which is 100 din, so na-mitigate yung, na-offset yung loss by 100. Yeah? Or sa hedge item mo, nagka-gain ka ng 100 pero sa hedging instrument mo, nagka-loss ka ng 100, so na-mitigate din yung any possible changes doon. Kasi may purpose to mitigate any. 'Di ba gaya na sabi din kanina, you are foregoing any future gains just in order to offset, manage any future losses. Diba yung nasabi din kanina? So ito, additional notes, conditions for hedge accounting, etc. etc. Ito, hedging relationships. Now, there are 3 types of hedging relationship. Fair value hedge, cash flow hedge, and hedge of a net investment in a foreign operation. Kasi 'di ba, yung not designated sa hedging, 'di ba? So hindi siya mako-consider na hedging kasi not designated nga. So yung natitirang tatlo, which is ito, saan yun? Ito, not designated. So wala yan. So no hedging. So component, So hedge of a net investment in foreign operation. So fair value hedges, ito sa fair value hedges pati itong mga cash flow hedges, tong hedge of a net investment. Sa recording lang mo yan sila nagkakaiba. Paano? Dito sa fair value hedges, kahit ngayon dati undergrad ko, nahilo rin ako dito anong pinagkaiba nila, pero binasa ko. Sa recording lang naman. Most generally. So sa fair value hedges, a hedge of the exposure to changes in fair value of a recognized asset or liability or an unrecognized firm commitment that is attributable to a particular risk and could affect profit or losses. So as you can see here, fair value hedges is only applicable to recognized asset or liability. Dito, recognized asset or liability and unrecognized firm commitment. Diyan lang applicable si fair value hedges. Now, paano natin ina-account si fair value hedges? Yung gain or loss from the remeasuring of the hedging instrument, profit or loss. Now, yung gain or loss naman sa hedge item, profit or loss din. Kay fair value hedges, applicable lang siya sa recognized asset or liability and sa unrecognized firm commitment. Yung gain or loss for both the hedging instrument and the hedge item, profit or loss sila. Ito naman discontinuance, read na lang prospectively. Ito naman kay cash flow hedge, iba naman sa kanya. Kasi ang tinitingnan natin kay fair value hedge is the changes in fair value. Kay cash flow hedge, ang tinitingnan natin is a hedge of the exposure to variability in the cash flows. Variability in the cash flows. Kung ano yung marireceive mo, hindi kung ano yung fair value. Yeah? That is attributable to a particular risk associated with applicable lang ang cash flow hedge sa recognized asset or liability rin and sa highly probable forecast transaction. So yan, for yung recognized asset and liability, applicable siya for both fair value hedges and cash flow hedges. Pero, itong unrecognized firm commitment sa fair value hedges rin siya. Itong si highly probable forecast transaction, ito yung mga basically mga customary transactions, customary purchases, customary sales. Sa cash flow hedge lang siya applicable. Ngayon, and could affect profit or loss. Na ito, a cash flow hedge is accounted for as follow. Okay. Yung hedging instrument, a portion of the gain or loss on the hedging instrument that is determined to be an effective hedge. Nasaan ang meaning effective hedge later on pag may tayo sample. Basically, tandaan nyo na pag effective hedge, other comprehensive income sa OCI siya. Yung ineffective portion niya ng hedging instrument, profit or loss. So, hedging instrument, gain or loss nun, yung effective portion, OCI. Yung ineffective sa profit or loss. To discontinuance to, etc. Ito naman for the hedges of net investment in a foreign operation. These are accounted for similarly to cash flow hedges. Accordingly ito, the portion of the gain or loss on the hedging instrument that is determined to be an effective hedge sa OCI, the ineffective portion, profit or loss. Ngayon, ang lang dito, the gain or loss on the hedging instrument relating to the effective portion of the hedge that has been recognized in other comprehensive income shall be reclassified to, from equity to profit or loss kapag nagkaroon ng reclassification adjustment sa disposal nito or partial disposal. So, parang ganito lang, discontinuance. Ito, para mas maging klaro, binigyan tayo ng table ni Zeus. Type of hedge, as you can see, yung no hedging, yung fair value, si cash flow, and si hedge of net investment. Etong tatlo, under yan sila sa hedge hedging relationships kasi designated sila as a hedging, may hedge instrument sila. Etong si no hedging in designation, so hindi siya address sa no hedging di ba? So for speculation lang siya for the accounting for changes sa fair values niya sa hedging profit or loss. Etong tatlo, si fair value hedge, kasi sabi natin, sa hedging instrument, profit or loss, sa cash flow, yung effective portion niya, OCI, yung ineffective, profit or loss. For the hedge of net investment na foreign operation, yung effective portion, OCI, yung ineffective portion, profit or loss. Ito naman, the types of hedge item, yung nasabi natin. Yung recognized asset or liability, pwede siya for both fair value and cash flow hedge. Or cash flow hedge. Yung unrecognized firm commitment, fair value hedge lang siya. Except for a hedge of the foreign currency risk of a firm commitment which may be accounted for as fair value hedge or cash flow hedge. Well, wala man yung halos. Yung sa highly probable forecast transaction, cash flow hedge, and yung sa net investment in foreign operations, since gaya ng sabi natin, similar sa cash flow hedge. So cash flow hedge din siya. Yan, no? Mas simple. Ito, additional notes na lang in regards to SME. So read na lang yan. So as you can see, itong chapter 1 natin, chapter 11, part 1 ng discussion sa derivatives, may tatlong remaining parts pa tayo, 3, 4, and 5, 2, 3, and 4, later on na yun. So ito, basically itong labot or importance ng chapter 1 na to, part 1 na to, is to basically discuss the concept. Kasi pagdating sa derivatives class, analytical skills talaga to dito. Of course, may procedural matters na kailangan, pero napaka-applicable ang analytical skills dito. And as accountants na rin kayo, dapat ma-apply nyo dito yung analytical skills nyo. So with that, gatong applications of concepts, tidis lang naman to. And ibibigay ko rin naman sa inyo na yung mga di ba? Yung mga answers para focus na lang kayo sa remaining remaining weeks for this semester. So with that, see you sa part 2. Bye-bye. Love you. Adolescent. So ito, hello sa inyo. Magandang gabi. So nakatulog ako nung tinatapos ko yung first video nito, yung first part nito. So ngayon, pagkatingin sa likod ko, gabi na. Kasi nakatulog ako, nakasiesta ako. Sarap ng tulog ko. So anyways, we will continue the discussion with derivatives and hedging. Kung ngayon, sa part 2 na tayo. Yung part 2 natin, part 2 is accounting for forward contracts. And part 2, chapter 12. So, ang forward contract, as we have discussed earlier, is a contract or is an agreement between two parties to exchange a specified amount of commodity, security, or foreign currency at a specified date in the future at a pre-agreed price. Like for example, kahit magkaroon man ng any kapag gusto mong makareceive ng 50,000 pesos for your $1,000, so nakipagkasunduan ka sa isang bangko na at the future, makikipagpalitan kayo na yung $1,000 mo, ibibigay mo sa bangko, tapos bibigyan ka niya ng 50,000 pesos. So, any fluctuation in the market, wala kayong pake doon. Kasi para sa inyo, wala kang pake doon. Kasi para sa'yo, as long as 50,000 na marireceive mo, goods ka na. Ganun yung forward contract. Now, magre-record ka ng gain or loss if ever man, sa future, na, di ba, sabi natin, fix 50,000 pesos yung marireceive mo for your $1,000. Now, what if sa future, 60,000 pesos pala sana marireceive mo? Wala fix yung kontrata mo So, may loss kang 10,000. Now, what if sa future, yung value ng dollar to peso, ang peso to dollar is 40,000. Tapos, ang fix na marireceive mo is 50. So, may gain kang 10,000. So, gaya na sabi natin, pagdating sa mga hedging, pagdating sa mga ganyang situation, nagkakaroon ng fluctuation. So, yung mga fluctuation na yun yung i-record mo as gain or loss. Diba? Sa mga kontrata mo. Ano pa ba sabihin ko? Tawag dito? Ngayon, we will now go to the examples dito kasi napahaba na tayo sa theories discussion, diba? So, diretso na tayo sa problems. Kung saan sa problems natin, meron tayong yung no designation for hedging. So, ibig sabihin, speculation ka dun. So, pure risk ang matatanggap mo. Wala kang mitigation, wala kang offset. Meron rin tayong ganito. May hedging. So, there's another instrument, there's another contract na kung saan it will offset the risk sa hedge item mo, di ba? Yun yung na-discuss natin, yung hedge item. Yan yung kontrata mo, investment mo, transaction na pinasok mo, na kung saan worried ka, nag-aalala ka, na baka sa kontrata mo na yan, sa transaction mo na yan, sa investment mo na yan, due to certain fluctuations, baka magkakaroon ng negative effect sa'yo na mas mababa yung marireceive mo, mas mababa yung value na marireceive mo, or baka mas taas yung value na receive mo, hindi mo alam. So, may risk, yun kasing risk na, di ba? So, in order to mitigate that risk, that negative effect that might happen to you in that hedge item, in that transaction, in that investment, papasok ka sa isang hedging or derivative hedging instrument, yeah? Hedging instrument. Para sa hedging instrument na 'yon, ang purpose nung sa buhay, gaya na sabi natin kanina, recap lang to, is to offset, is to mitigate, is to avoid, or is to, ano pa mong gandang word, manage the risk sa iyong hedge item. So ngayon, mabivisualize na natin yan kasi examples na tayo. So ito, illustration 1, fair value hedge of a recognized asset. O di ba, na-discuss natin kanina, meron tayong yung no hedging designation, di ba? Yung una, so pure speculation lang yun, walang hedging instrument doon. Then under hedging relationships, meron tayong tatlo, di ba? Fair value hedge, cash flow hedge, and the net investment in foreign operations. Ngayon, 'di ba? Under the fair value hedge, dalawa yung meron tayo. Recognized asset or liability and the unconfirmed firm commitment. So ito na 'yun dito. Recognized asset tayo, fair value hedge. And sa fair value hedge, saan natin i-record yung changes sa gain or loss ng hedge instrument and ng hedge item sa profit or loss. So on December 15, 2001, ABC Co. sold goods to a Japanese firm for 1 million peso, 1 million yen. So as you can see here, nagbenta ka ng goods to Japanese firm. So ano yan, di ba? May receivable ka. O kaya nga, recognized asset. Yan yung hedge item mo. Ito yung hedge item mo. Yung pagbenta mo ng goods sa isang Japanese firm, kung saan na marireceive mo is 1 million yen. Yan yung hedge item mo. Yan yung transaction mo. Ngayon, itong si ABC ko, nag-worry. He's concerned kasi, siyempre, ang marireceive niya is foreign currency, di ba? So, there's a risk of fluctuation sa Japanese yen. So, na baka, yung value na marireceive niya, mas mababa compared sa kung anong value meron today. Yung value na marireceive niya sa future, baka mas bababa as compared sa kung ano yung value niya today. So, nababahala siya doon sa fluctuation na yun. So, sabi niya, bahala na. Pasok tayo sa hedging instrument. I will forgo the possible gain in the future na mas mataas yung value na marireceive ko in order for me to at least manage or offset the risk na mas mababa yung value na marireceive ko sa future. So, yun, di ba? Forgoing any future gains in order to offset or manage any possible future losses. Yan yung hedging. Okay, gets. So, yan. So, on this date, para gusto niya fix lang eh. Gusto niya gusto niya ma-offset yung any possible risk eh. So, sabi niya, pasok tayo sa hedging instrument. So, sabi dito, on this date, si ABC entered into a 30-day forward contract to sell 1 million yen. Sir, what do you mean? Sell 1 million yen. Anong niyan? Kasi 'di ba? Ang marireceive ni ABC ko, ganito lang. Simple common sense. Ang marireceive ni ABC ko is 1 million yen. Na itong siste. Anong gagawin niya sa 1 million yen? Anong gagawin niya diyan? Nasa Pilipinas siya. So, yung 1 million yen, i-exchange niya yan sa isang financial institution, sa isang bangko. Ang term na ginagamit is to sell 1 million yen para makareceive siya ng 470,000 pesos. To a bank at a forward rate of 0.47. Kasi kaya yung term na ginamit yan is sell 1 million pesos kasi ang marireceive ni ABC ko dito sa hedge item na to is 1 million yen. O anong gagawin niya sa 1 million yen? Pinoy siya eh. So, gusto niya peso. So pupunta sa bangko, may 1 million yen ako dito. Okay. Now in that case, dito kasi, dito second portion natin, papasok na siya sa isang hedging instrument. Gusto niya kasing ma-offset yung possible fluctuations sa Japanese yen na marireceive niya in the future. So dito, papasok siya sa isang hedging instrument. ABC Co. entered into a 30-day forward contract to sell 1 million yen for 470,000 to a bank at a forward rate of 0.47. So inisip ng ABC, ganito. Ulitin ko lang yung sinabi ko kanina na okay, I will forgo any future gains from the fluctuation in the Japanese yen just in order for me to offset, mitigate, avoid, manage any future risk na mas mababa yung value na marireceive ko. So yun yung mindset niya, okay, fix dapat ang marireceive ko from that Japanese yen at the very least. Gusto ko ma-mitigate yung risk eh. Gusto kong ma-offset. So yan, pumasok sa isang forward contract. Na in the future, gusto niya sa 1 million yen, ang marireceive niya is 0.47 pesos per yen for 470,000 pesos. Gusto niya yung marireceive niya in the future. So kahit anong fluctuation dyan, gusto niya 470 marireceive niya. Gusto niya fix para walang masyadong risk. Oo. Ganyan, di ba? Ganyan yung flow of thought dyan. So ito mahalaga to. Spot rate and forward rate. Now, ang difference is spot rate, ang other term sa kanya is the current rate. Kung ano yung rate as of the moment. Now, ang forward rate, paano ba yan explain? Ang spot rate kasi, yan yung current rate. So, ito yung current rate at December 15. Ito yung current rate at busog pa ako. Ito yung current rate for as of December 31 and ito yung current rate as of January 15. O spot rate ang tawag dyan. Na ang forward rate naman, yan yung rate na kung saan at this date, ang definition kasi ng forward rate is the settlement rate of a future transaction. The settlement rate of a future transaction. Yan yung definition ni forward rate. So, meaning dito, itong forward rate, yung settlement rate of a future transaction as of December 15 is 0.47. O yun, no? The settlement rate of a future transaction as of December 15. So, hindi yan siya current. Nang sinasabi lang dyan, as of December 15, yung future transaction na to, yung settlement rate niya sa future is 0.47. As opposed to the spot rate of 0.48, kung saan ang sinasabi dito, as of this moment, the spot rate is 0.48. Yun sa spot rate, the current one. Pagdating sa forward rate, ang siste dyan, as of this December 15, the settlement rate of a future transaction is 0.47. O yun yung difference ng dalawa. Okay? So ito, nung December 15, December 31, yung year-end, kasi nagre-record sa year-end, and the settlement date. So as you can see here, the entries on December 15. O, di ba? December 15, nag-enter into a contract siya, no? Nag-enter into, ito yung hedge item natin. Kung saan nagbenta siya, no? Kung saan nagbenta si ABC ko ng goods kay sa isang Japanese firm, kung saan ang marireceive niya is 1 million yen. So yan yung hedge item natin. Ito yung transaction na gusto nating ma-offset yung risk, di ba? Yan yung transaction na gusto nating ma-offset yung risk. So since 1 million yen yung na-receive niya, convert mo yan sa peso using the spot rate of 0.48. Oh? So, ang accounts receivable na i-record niya is 480,000. Sales 480. And di ba? Ang sales hindi natin pinapalitan yung ito lang, di ba? Yung napag-usapan natin sa foreign exchange rates, di ba? Foreign currency transaction rates. So, basta yung last topic. Ngayon, spot rate. Ngayon, pagdating sa hedging instrument, the forward contract, the derivative, wala tayong entry. Di ba? Napag-usapan natin doon sa part 1 na sa hedging, sa mga derivatives, wala tayong nire-record na initial investment. If meron man, minimal lang. And yung minimal na nire-record natin is pagdating sa option contracts for the option money. Di ba? Pero pagdating dito sa forward, sa futures, wala tayong nire-record na initial investment. Kaya no entry yan. Kasi wala pang changes nangyari eh. Tingnan mo, forward rate mo 0.47 o 0.47 kasi yan yung basis niyan. Na as of December 15, the settlement rate of a future transaction is 0.47. So yan yung naging basis niyan. Yeah? Kaya no entry yan dyan. Ngayon, pag December 31 na tayo, kung saan, yan, year-end reporting na eh. So you need to record any changes if may changes na nangyari. Ngayon, ang siste, spot rate nung December 31 is 0.49. So yung receivable na marireceive mo, 10,000. Instead of 480,000, naging 490,000 na kasi 1 million times 0.49. So yung receivable mo, marireceive is 490,000 na. Aba, mas malaki yung marireceive mo. On that, mas malaki yung value sana na marireceive mo as of December 31. So, tataas yung accounts receivable mo, may forex gain ka, di ba? Kasi instead of the original 480, 490 na yung marireceive mo. Aba, goods for you. Bravo. That is, nag-fluctuate kasi yung currency rates ng yen and peso. So, yan yung marireceive mo. Additional 10K ka. Now, in relation to that, punta tayo sa hedging instrument. Now, dito sa hedging instrument, as you can see, diba ang purpose niya is to mitigate any or to offset any changes sa ating hedge item, diba? To offset any changes. So, always think dalawa ang contracts na meron tayo pagdating sa hedging. The hedge item, the one that happens in the hedge item, and the one that happens in the hedging instrument. Nasabi naman natin yan kanina pa. Sanay na ako? Ngayon, as you can see, dito 0.485. May problema. Kasi 'di ba sa future, ang pinag-usapan nyo ni bangko na kapag bibigyan mo siya ng 1 million yen, ang marireceive mo 470. Di ba? Ang problema, tumaas yung rate ng peso over the yen. So if ever wala tong kontratang to, ang marireceive mo sana is 485,000. Fix yung pinag-usapan nyo at 47, peg at 47, na instead, sayang, yung 15. Kasi na instead na 485 sana marireceive mo, pinag-usapan yung fix 470 yung marireceive mo So may loss ka. Loss on forward contract of 15. Forward contract liability, 15. Sad life. Malaki sana marireceive mo. Pero, di man yan ng kasi ang purpose niya ng derivative contracts or ng forward contract natin in this case, the hedging instrument, is to offset any changes that might happen sa hedge item. So, So, dito nagkaroon ng gain, pero dito nagkaroon ng loss. So, parang nag-offsetan lang sila. Kasi yun talaga yung purpose ni hedging instrument kapag may hedging designation ka. Yun talaga yung purpose niya. Kung magtataas dito, then may baba dito. May bababa dito. Kung may bababa dito, then may tataas dito. Kaya nga offsetting. Now, not necessarily na kung magkano yung binaba dito or changes dito, ganun rin yung magiging changes dito. Hindi. Basta magkakaroon sila ng offsetting. Kasi considering ang basis nito ni hedge item is yung spot rate, ang basis nito since forward yan siya, forward contract yan siya, forward date ang basis niyan. So, ayan. Pero, ganito yan. In the future, etong si spot rate and si forward rate, pagdating ng settlement date, pareho yan sila parati. Magsisame yan talaga sila. So, kahit na at the first place, sa middle, hindi sila same, pero pagdating ng settlement date, pareho yan sila. Tandaan nyo yun. So, yun. Nakita nyo, di ba? Dito, ulitin natin. Goods, tumaas yung value ng peso over the yen. So, mas tataas yung value na marireceive mo. 499 instead of the original 480. Kaso dito pagdating sa hedging instrument, since the purpose niya is to offset any changes na nangyari sa hedge item mo, na kung saan 470 yung marireceive mo yung fix na marireceive mo sa bank, pero 485 yung naging fluctuation sa forward rate, yung naging increase sa forward rate, nagkaroon ka ng loss na instead ng 485 ang marireceive mo, 470 na lang. Okay, nag-offset sila. Now, ito. Yan, baka question sa board exam. What is the loss on forward contract as of December 31, 2001? Ito ang lalabas. The fair value nung December 31. Guys, sumasakit ulo. Nung fair value ng December 31 for the initial, the 485 current forward rate minus the 0.47 initial forward rate. So, may 15,000 liability ka. Ito yun. So, wala namang nangyaring changes ng nung December 15. So, 0 yan. So, yung loss on forward contract mo, forward contract pa lang yan Hindi, hindi for both. Forward contract pa lang yan is 15,000. Kasi ito naman pag-usapan naman natin yung forex gain, forex loss sa previous topic. So, yung forex gain natin dito is 10K. Yung loss natin dito sa sa hedging instrument is 15,000. Ngayon sa board exam question, ang magiging question dyan, hindi magkano yung forex gain, hindi magkano yung loss on forward contract. Ang magiging question dyan, what is the net gain or loss in this situation? Yun yung magiging question sa board exam. So in this case, what is the net gain or loss? Isip sila. Ang net loss natin dyan, kita nyo, 15. May forex gain tayo of 10, and may may loss tayo sa forward contract of 15. So that is a net loss of 5K. Kasi nagkaroon ka nga ng gain dito. Pero nagkaroon ka naman ng loss dito. So nag-offset sila. Tapos since mas mataas yung loss sa hedging instrument mo, may net loss ka of 5K. Yan yung tinatanong sa board exam. Ano yung net gain or loss mo? Ngayon punta na tayo sa settlement date, which is on January 15. January 15. So, nakita natin ito, gaya ng sabi natin kanina. Pagdating ng settlement date, pareho na yan si spot and forward rate. So, wag niyo problemahin yan. So, gaya ng sabi dito, nung January 15, ang value ng 1 million yen sa ating spot rate is 0.46. Hala, so kawawa ka. Bakit? Tingnan mo. Nung una, 480,000 yung ma-record mo. Yung expected mong marireceive. Pero pagdating ng December 31, masaya ka. Kasi yung marireceive mo, tumaas yung value to 490,000. Kaso pagdating ng settlement date, kawawa ka. 460 na lang yung marireceive mo from the original 480 na tumaas ng 490 at the settlement date, 460 na lang marireceive mo. May loss ka. Kawawa ka naman. That is a risk. Because of this fluctuation in the currency rate of the Philippine peso and the yen, that is a risk na, yes, there's a possible gain na tumaas yung value ng marireceive mo. But there's also a risk na mas mababa yung marireceive mo. Ito na yun. Kita mo. 460 na lang yung marireceive mo from the original 480 plus 10, 480 na naging 490. So may forex loss ka may forex loss ka na 30K. Kawawa ka naman. Arura yang. Di ba? Loss yan on your part. Ngayon, kung wala tayong hedging instrument, yan talaga yung mangyayari sa'yo. Walang offset, walang mitigate ng risk, walang na-manage. Pero since may hedging instrument tayo, designated siya as may hedging, so, ma-offset mo yung loss na yan. Di ba? Kung saan? Noong January 15, tiyan mo, kung isipin mo, 470 yung marireceive mo sa bank, di ba? Fix na marireceive mo sa bank. Na nung bumagsak ng 4.46 na supposedly dapat 460 marireceive mo, pero since naka-fix to 470 yung marireceive mo sa bangko, so may gain kang mas mataas. Yeah? Kasi 485, 47. Tapos 485, di ba? Nagkaroon ka ng loss dito kasi sayang 485 sana marireceive mo kasi fix at 470, yun yung logic. Yun yung reasoning. Pagdating ng January 15, Diyos ko, 470 marireceive mo. Pero 0.46 na yung value. 460 yung value sa market. Aba, swerte ka. Mas mataas yung marireceive mo as compared dito. So, meron kang gain. Anong gain mo? Sanin tayo? Ito. Oh, di ba? Kung makikita nyo dito, logical itong tawag dito, journal entry. Kasi, as you can see, itong cash local currency, ito yung marireceive mo sa bangko. Ito yung marireceive mo sa bangko. Sa kontrata mo sa kanya as a forward contract. Oh, ito, yan o. Yan yung marireceive mo sa bangko. That is the agreed rate between the two of you. Nabibigyan mo siya ng 1 million yen, bibigyan ka na niyang 470,000 fix. Yun yung pinag-usapan nyo. Yun yung exchange nyo. Ngayon, ito naman, nakikita nyo dito, yung cash of 460. Ito yan. Yan yun. Na, siyempre, kasi po, ang pinipresent niyan, yung 1 million yen. Yan yung pinipresent niyan, yung 1 million yen. Yung pinipresent niyan, yung yen. Kaya dito nakalagay 46. Hoy. Yung what mo yun? Saan yun? Oo, yan. Hoy. Loko man tong mouse na to. So, saan yun ako? So, yan yung etong cash foreign currency, nire-represent niya yung 1 million yen. So, nire-represent nito yung pagbigay mo ng 1 million yen sa bangko. Oh, ito, nire-represent ito yung 1 million yen na na-receive mo. Ngayon, na-receive mo na diba yung 1 million yen? So, ngayon, pupunta ka na sa bangko para makipagpalitan sa kanya. So, i-give up mo na yung 1 million yen, which is represented by this cash foreign currency, 460,000. So, don't forget that. Para, hala sir, bakit meron yung cash local currency, cash foreign currency? Kasi itong cash foreign currency, yung 1 million yan, kinonvert lang natin to the spot rate of 0.46, kaya 460. So, ngayon, di ba, pinagkasunduan mo sa bangko, na yung 1 million rin, mag-exchange kayo ng magkakaroon kayo ng exchange. Bibigyan mo siya ng 1 million yen, represented by this cash foreign currency transaction, cash foreign currency of 460,000, di ba? Kasi yan yung na-receive mo sa Japanese sa Japanese firm. O yan, ginibap mo. Kinonvert mo lang dito sa peso, dito sa journal entry mo. Ngayon, as you can see here, di ba? Ito, then, at the end, ito yung marireceive mo sa bangko for that 1 million yen, 470,000. Tapos ito, kinos mo na yung contract liability na nirecord mo dito. And ito, nag-record ka ng gain on forward contract. Kasi 'di ba? Okay. Ng gain on forward contract. Kasi 'di ba? Sana 'yan? 0.47. Tumas ng 0.45, 0.485, naging 0.46. So ito nung January 15, ang current forward rate, nabubulol naman ako. Ang current forward rate mo is 0.46. Minus mo sa sa initial forward rate of 0.47. So ito, kailangan talaga ng analyzation dito, di ba? Times 1 million. So 10,000 yung asset mo. Meron ka namang kasi 'di ba? Paano ba 'to explain? Kailangan i-graph ko 'to. Kasi 'di ba? At the first place for Pintok tayo. Ito 'di ba 470 mo? Bigla kang nagkaroon ng loss of kasi naging 485 siya. So nagkaroon ka ng loss of 15. Pero at the settlement date, nagkaroon ka ng gain kasi naging 460 siya. So yung naging jump dito, kasi ito yung as of December 31, di ba? 485. So nagkaroon ng jump dito na basically nagkaroon ka ng gain of 25,000. Kasi di ba? 470 yung peg mo. Tapos nagkaroon ka ng loss kasi dahil dito sa 485, pero tumaas siya na naging 460 siya. So nagkaroon ka ng 485 to 460. Kaya dito kaya 25 yan lumabas dito. O yan. Mas maganda sana kung personal yan. Personal tuturo. So as you can see here, follow nyo na lang tong formula sa baba. So fair value 0.46 current forward date, or haluan nyo na lang ng common sense, di ba? Na 460 from 485, 470 naging 485, tapos at the end pala 460. So nagkaroon ka ng net gain gain sa forward contract mo 25,000. Let's forward December po. Gain. Ngayon, ang tanong yan sa board exam, what is your net gain or loss? 5,000. 5,000 yung net gain or loss mo. Net gain. Net loss mo. Di ba? Kasi yung forex loss mo is for 30K. Then yung gain mo sa forward contract is 25K. So, na-mitigate mo yung loss mo by 25,000. So, 5K na lang yung net loss mo. So, yan yung trabaho ni hedging instrument. Kasi kung wala tong hedging instrument, yung loss mo sana is around 30K. Since may hedging instrument ka, na-hedge mo, na-mitigate mo, na-limit mo yung loss mo. So, yung loss mo, 5K na lang. Yan yung purpose ng hedging instrument sa buhay. And as you can see here, sa pinagagawa natin, kailangan talaga ng analyzation, di ba? Ngayon, etong ginawa mong journal entry sa hedging instrument, hindi yan usually ginagamit namin sa board exam or sa any quizzes for that matter. Kasi masyado siyang convoluted. Simplehan natin. The net cash settlement. Now, a derivative can also be settled at net, which is yun talagang ginagawa Kasi na instead na magpalitan kayo ng malalaking halaga, yung net na lang, yung net effect na lang, yung babayaran nyo, yung papalitan nyo. In this case, magpapalitan pa kayo ng 470,000 worth of cash and 460,000 worth of cash. Masyadong malaki. Masyadong hassle yan. So, in that case, nagloloko yung scroll ng mouse ko. Loko, paano tayo napunta dito? Nagloko yung scroll ng mouse ko. Now, in this case, saan ako? Now, in this case, instead na magpalitan kayo ng malalaking halaga, yung net na lang. Yung net settlement na lang. So, yun yung dito. Yung net cash na lang. Assuming the illustration that ABC Co and the broker agree to settle the forward contract, yung broker, yung bangko, through net cash settlement, the entries on January 15 will follow. So, remain ito. Nakita nyo dito, sa hedging instrument, makaka-receive na lang ng 10,000 local currency si ABC Co. Kasi dito, di ba, makaka-receive siya ng 470, magbibigay siya ng 460. So, instead na magganyan pa yung mangyari, hassle yan, malaking halaga yan, yung net na lang nila, yung difference na lang, yung babayaran. Since makaka-receive si AB ko ng 470, magbabayad siya ng 460, so magre-receive na lang siya ng 10K para yung difference na lang ni 470 at ni 460. So, yan na lang. Yan yung usually ginagawa, yung net cash settlement. Ganyan lang. Ganyan yung ginagawa. Ito, let's go to no hedging designation for speculation to. For speculation. So, ABC Co expects the value of the yen to decrease in the next 30 days. Accordingly, on December 15, 2001, ABC Co enters into a 30-day. Diba? Pag held for speculation, wala tayong hedging dito. So, as it is yung loss, as it is yung risk incurs the risk. Kung tataas man yan, yung value na marireceive mo, edi good for you. Pero pag bababa yung value na marireceive mo sa future, edi bad for you. Wala kang hedging instrument to offset any changes. No? ABC Co expects the value of the yen to decrease. So yun, in-expect niya, nag-speculate siya. Na sa future, yung value ng yen, in 30 days, bababa. So in that reason, ang ginawa ni ABC Co nung December 15, he entered into a 30-day forward contract na kung saan sa future, magbibenta siya ng 1 million yen at a forward date of 4.47. Yun, no? Sa future, sa January 15. O, kaya 30 days. Now, nung December 31, yung forward rate was 0.485. Pagdating ng January 15, the next year, 2002, yung spot rate, which is pagdating ng date na yan, same na rin sa forward date, is 0.46. So, as you can see, from this alone, sa tingin nyo, sinuwerte ba? Sinuwerte ba? ABC ko sa kanyang speculation? Malalaman natin. Now, as you can see here, wala tayong entry nung December 15 kasi wala tayong hedge item eh. No hedging designation. Pagdating ng dito rin wala rin eh. Kasi 'di ba? Ano ang isa sa mga characteristics ng derivatives? Walang initial investment. Kung meron man, minimal lang. And yung minimal na 'yon, sa options pa 'yon. Ngayon, pagdating ng December 31, year-end recording, year-end adjustments, anong mangyayari? Wala tayo sa hedge item kasi wala namang hedge item the first place dito. Pero dito sa forward contract natin, as you can see, yung value, may loss siya. Bakit? Kasi, gaya na sabi natin kanina, tingnan nyo. Sa future, pag after 30 days, yung pinag-usapan nila, makaka-receive siya ng 470,000 for his 1 million yen. Pero pagdating nung December 31, yung value ng yen is 485. So, isipin mo, 470 yung ma-receive ko, kaso 485 sana yung value niyan. So, lugi ako by 15,000. Na ang reasoning dyan, 470 fix yung ma-receive ko. Sayang, 485 yan eh. So, manalugi ako. Nagkaroon akong loss ng 15. Ito yun. Kung nagbenta siya na sa market, 485 siya na ma-receive niya. Kaso, naka-fix 470 yung ma-receive niya. Loss yan. Na pagdating ng January 15, which is 4.46 na yung rate, as you can see, good for him. Makita nyo dito, the cash for the local currency, ito, 470 ang na-receive niya. The agreed rate. Ngayon, yung 1 million yen niya, itong 460,000, bumaba nga yung value ng yen. Swerte siya. Bumaba yung value ng yen. So, nagkaroon siya ng gain. So, itong 0.15, itong 25, same lang dun sa ginawa natin kanina. So, nagkaroon siya ng gain eh. Isipin mo, 470 yung ma-receive niya, fix. Tapos yung value on that date pala is 460. So, makaka-receive siya ng 10,000. Gain on forward contract. Na itong mga gain on forward contract, sir, bakit hindi 10K? Kasi di ba 470 tapos 460. So, dapat 10K yung niya, magiging gain. Take into consideration yung naging flow. Same sa ginawa natin sa foreign exchange rates, di ba? Yung contract date to the year-end reporting and yung settlement date, yung staggering of staggering na eto, kung any changes may nangyari, yung gaya na ginawa natin dito, 470 siya fix, tapos nagkaroon siya ng loss kasi naging 485, di ba? Tapos nagkaroon siya ng gain kasi naging 460 na lang. So, yung total na paggalaw ng gain is from 485 to 460, kaya 25 yan. Kaya gamitan talaga ng analyzation dito. Ito naman, pag net, same net. Ito naman, get siya, itong difference lang dito, instead of pahaba pa yung discussion, recognized liability to. Kasi yung unang pinag-usapan natin is recognized asset. Kung saan ikaw yung makaka-receive may ma-receive kang realized asset, which is the receivable. In this case naman, pagdating sa recognized liability, ikaw yung nag-purchase. Ikaw yung ng liability. May i-recognize liability. In this case, purchase yan. So, ibig sabihin may payable ka. Sana yun? Ah, etong si on December 15, so parang baliktad lang 'to eh. Like, dito payable lang mo. So, analyzation talaga kasi yung isa receivable. So, yung gains or losses mo nakadepende kasi receivable 'yon. In this case, payable siya. So, ibahin ulit yung mindset na dito payable. So, yung gains or losses nakadepende rin sa payability nito. Okay? So, analyzation talaga 'to. Kaya for me, personal opinion ko lang. Pagdating sa advanced accounting, ito talaga yung derivatives and hedging, yung kinakailangan talaga ng analyzation skills ng isang accountant. Sir, ganyan ba kahirap sa board exam? Surprisingly, hindi. Pagdating sa derivatives, nagulat ako. Pagdating sa derivatives and hedging transaction, hindi siya ganito kahirap sa board exam. Alas yun, hindi pa nga yan mahirap, sir. Sa of course, kasi hindi pa nga tayo tapos sa part 2, may part 3 and part 4 pa. Pero pag natapos natin itong lahat, masasabi niyo na mahirap man yan, sir. Oo, no sugar coating, mahirap to. Pero pagdating sa review sa board exam, magugulat kayo, hala, hindi man to ganito kahirap nung undergrad namin discussion. Kahit ako nagulat rin. But anyways, let's continue the discussion. On December 15, 2001, ABC ko purchased goods from a Korean firm for 10,000 wons. So to purchase, ibig sabihin may payable siya. Tapos yung babayaran niya, in the future, 10,000 won. So, si ABC ko may concern. Kasi 10,000 won yun eh. Paano pag nagkaroon ng fluctuation sa Korean won? Aba, baka mapapasobra ako ng bayad dito. May negative effect sa akin. Kasi baka mas malaki yung babayaran ko. Or baka mas maliit yung babayaran ko, value ng babayaran ko. Hindi niya alam. Because of the fluctuation, because of the risk. So for him, he will forgo the possibility of gaining from that purchase, from that transaction, in order for him to offset the risk na meron sa transaction na yan. So papasok sa isang hedging instrument. Gusto niya ma-offset yung risk. Wala siyang pake if there's a possibility of gain. Gusto niya lang talaga nananaig sa kanya na ma-mitigate yung risk na ma-offset because of the changes sa fluctuation ng Korean won. So because of that, ABC ko entered into a 30-day forward contract kung saan buy, as you can see here, buy 10,000 wons. Sir, anong explanation mo dyan, sir? Diba dito? Sell. Sana yun? Sell 1 million won. Kasi dito, ang nangyari, nagbenta siya, diba? So, naka-receive siya ng 1 million yen kasi nagbenta siya. Anong gagawin niya sa 1 million yen? Wala, Pinoy siya eh. So, gusto niya ng peso. So, makikipag-exchange sa bangko. Kaya, sell 1 million yen. Ibibigay niya. Magkikipag-exchange siya. Now, in this case, pagdating sa recognized liability, since ikaw yung magbabayad, payable mo eh, purchase eh, ikaw yung magbabayad, tapos ang ibabayad mo sa isang Korean. So, ang ibabayad mo sa kanya is pera ng Koreano, which is won. In this case, 10,000 won. So, saan ka kukuha ng 10,000 won? Pinoy ka eh, peso ka meron. Di pumunta ka sa isang bangko, sa isang financial institution na may won. So, with that, kasi won ang kailangan mong pangbayad Korean won. So, pupunta ka sa isang institution na may Korean won, which is yung mga bangko natin or other finance institutions. So, with that, bibili ka sa bangko ng 10,000 won. Kasi yan yung gagamitin mong pambayad. Yun yung logic doon. Kung saan, bibilihin mo yung 10,000 won na yan for 12,400 pesos at a forward rate of 1.24. So, yan. Sana tayo? Ito, spot rate, forward rate. So, same lang sa explanation kanina. Now, as you can see here, same lang. Not same lang. Wala rin tayong entry sa hedging instrument kasi wala pang difference sa forward rate. Kasi kung ano yung forward rate dito, yun talagang ilalagay dito. So, wala yung entry dyan. Wala ring initial investment. Now, dito, since bumili ka sa Koreano, yung pambayad mo is 10,000 won, yung spot rate as of that date, December 15 is 1.20. So, may na-receive kang inventory of 12,000, accounts payable mo 12,000 din. Pagdating ng December 31, the year end, magkakaroon ka ng adjustments, may problema ka dito sa hedge item mo, sa accounts payable mo. Kasi, tingnan mo. Tingnan mo, yung value ng Korean won. Yung value ng peso sa Korean won, yung rate nun, tumaas. Aba, kung tumaas yan, aba mas mapapagastos ka, kapatid. Kasi at the first place, 12,000 lang sana yung babayaran mo. Tumaas yung value, tumaas yung rate. So ngayon, yung babayaran mo, 12,600 na. Aba, loss yan sa'yo, di ba? Kasi mas tumaas yung babayaran mo, tumaas yung liability mo, tumaas yung payable mo. Na at the first place, yung December 15, 12,000 lang sana. Pagdating ng December 31, 12,600 na yung babayaran mo. So, there's a loss on your part, forex loss, of 600 peso. So, tumaas yung liability mo, yung payable mo, 600. Ngayon, may good news sa'yo, kapatid. Ano yun? Kasi in this case, nagkaroon ka ng loss dito, no? So, expect mo na, pagdating sa hedging instrument mo, may gain ka. Ang question na lang, magkano? Tingnan mo yung forward rate. O to, 1.24 noong December 15, naging 1.27 noong December 31. So, meron kang gain on forward contract in the amount of 300. O, 300 yung gain mo. O, di ba? Kung medyo nahirapan ka pa, at least may procedure, kung kahit pa paano may procedure. Pero ang problema dyan, kung i-follow yung procedure, tapos nagkaroon ng tinkering, tapos hindi mo na properly analyze, baka magka-problema ka. So maganda, properly na-analyze mo, properly na-intindihan mo, and alam mo yung procedure. Mas maganda ganun yung combination. So ito yung gain on forward contract mo. So anong net mo dito? Anong net gain or loss mo dito? May net loss kang 300 kasi may forex loss ka of 600, may gain ka naman of 300. So may net loss ka of 300. So yan yung tanong sa board exam. Hindi yan mga ano yung net gain or loss mo dito sa transactions, dito sa problem. Yan yung tanong sa board exam. Yan. That is as of December 31. Ngayon let's go to the settlement date on January 15. 2002. Ngayon yung January 15, yung hedge item mo, accounts payable mo, aba, kawawa ka naman, kapatid. Yung original na babayaran mo, 112,000 lang. Tumaas nung December 31. Mas tumaas pa nung January 15 yung value ng babayaran mo. So, mas tumaas yung forex loss mo. 12,000 yung babayaran mo na this time is 13,000. Kasi 10,000 noon times 1.3. Wala ka choice. Babayaran mo 13,000. So, ito. Accounts payable mo, 12.6. Tapos nag-additional forex loss on your part. So, yung total forex loss mo in this case is di ba? In this hedge item is 600 plus 400. So, nalugi ka talaga, no? But, no worries kasi may hedging instrument ka yan. May hedging, pumasok ka sa isang hedging instrument eh. So, ma-offset mo yung loss na yan. In this case, ito yun, no? Same naman, 1.3. So, naka-receive ka ng 13, since, as you can see, di ba, baliktad dito. Debit yung cash foreign currency. Di ba last time sa realized asset, debit yung cash local currency? Since baliktad man dito kasi receivable yun realized asset yun, nasa payable tayo, nasa realized liability. So yun, naka-receive ka ng cash foreign currency of 13,000 galing kay bangko kasi yan yung 10,000 won mo. Yan, ito yun sila Yan yung Korean won mo Yan yung Korean won mo. Yan yung 10,000 Korean won mo. Kinonvert lang to Philippine peso pagdating dito sa journal entry for recording purposes. Pero yan yung Korean won mo. So in this case, ito yung maunang ano eh. Ito yung, di ba last yung sa previous ano natin, ang nauna is naka-receive ka ng ano dito, naka-receive ka ng receivable dito, tapos pumunta ka sa bangko para exchange yan. Di ba? Yun yung ano, yun yung system natin doon. Dito naman, since kailangan mo pambayad dito ng 10,000 won, so mauna ka munang pumunta sa bangko para kumuha ng 10,000 won para yun yung pambayad mo dito sa accounts payable mo. So yun, di ba? Balik-baliktad lang yan sila. Now in this case, okay, naka-receive ka ng 10,000 won sa bangko. Kung i-convert mo sa peso, 13,000 peso yan. Ngayon, ang binayad mo sa bangko for that won is the fixed agreed price of 12,400. Sana yun? Illustration to. Is the agreed ano? Illustration to plan of 12,400. Yan yung binayad mo sa bangko for the 10,000 Korean won na kinonvert na natin to 13,000 peso. Tapos nagkaroon ka ulit ng gain of 300. Kasi from 12.7, tumaas pa to 13. From 12.7, tumaas pa ng 13. So that is an additional gain of 300 peso. Ngayon, in this situation, ano yung net gain or loss mo? 400 loss, 300 gain, so net loss of ano? Net loss of 100. So ganyan lang kasimple. Kaya medyo na-enjoy ako dito eh kasi analytical talaga yung topic na to. Ngayon to, net cash settlement. So instead na magano sila, difference na lang. Ito no hedging for speculation. So similar topic lang to. So read nyo na lang. Okay, hello. So dito nga tayo sa next topic, which talks about the fair value hedge of an unrecognized firm commitment. Kasi yung previous natin is on the realized asset and realized liability. Kung saan fair value hedge yung ginagamit natin. Ngayon, dito tayo sa second type of hedging relationship, which is the unrecognized firm commitment. Now, dito sa unrecognized firm commitment, basically, this is a firm commitment is a binding. Ito, na-discuss naman natin ito kanina. So, alam naman natin ang meaning nito. Basta, ito ay isang commitment na kung saan it is a binding agreement to sell or purchase a specified quantity of resources at a specified price on a specified future date or dates. Like, for example, next month on February 14, I will sell you 100 kilos of roses for 45 kilos each. O no? May specified quantity ka na at a specified price and a specified future date. Dapat ang firm commitment binding agreement yan. Tandaan nyo, ang firm commitment, binding agreement. Now, when an unrecognized firm commitment is designated as a hedge item, o ito, naging hedge item siya. Ibig sabihin, may papasok kayong hedging instrument dan to offset any changes. Now, the subsequent cumulative changes in the fair value of the firm commitment is recognized as an asset or liability with a corresponding gain or loss recognized sa profit or loss. Sa hedging instrument, yung changes sa fair value niya, profit or loss din. Kasi pagdating dito sa unrecognized firm commitment, may kaibahan sa kanya as compared doon sa ginawa natin kanina sa recognized asset or liability. Oo, iba yung, although same sila ng concept, iba yung gagawing recording sa journal entry. Now, the initial carrying amount of an asset or liability that results from the entity meeting the firm commitment is adjusted to include the cumulative change sa kanyang fair value of the firm commitment that was recognized sa statement of financial position. Basta basically, ang unrecognized firm commitment, binding agreement yan for a purchase or sale of a specified quantity, specified price, and specified future dates. And since under sa fair value hedge, any changes sa profit or loss for both hedge and item and the hedging instrument, profit or loss yung changes. Para mas maging klaro tayo sa kaibahan ng firm commitment natin, dito tayo sa fair value hedge of a firm. Tandaan nyo, sale sale. So ikaw yung nagbebenta dito, ikaw yung may receivable. Sale. Kasi mamaya meron rin tayong purchase commitment. But for illustration 5, firm sale commitment tayo, okay? So on December 15, 2001, ito may pareho to sa natin sa previous examples natin. Kaso yun under sa recognized asset, recognized liability. Ito, firm sale, firm purchase commitment. So, nung December 15, ito same problem lang. Si ABC ko, receive. May difference lang. Tingnan nyo. Yung sale order. Naka-receive lang siya ng sale order. Parang contract to sell yan eh. Contract to sell. Hindi yan contract of sale, but rather contract to sell, which means executory pa lang yan. Wala pang significant substantial performance. So yan from a Japanese firm in the amount of 1 million yen. Kasi tingnan nyo dito, to sell or purchase a specified quantity of resources at a specified price on a specified date. So ito yun, sale order. Kung saan ang agreement nila, saan dito? Magbibenta ng goods si ABC ko. Magbebenta ng goods kay Japanese firm in the amount of 1 million yen. Kung saan, the goods will be delivered sa January 15. So yan yung firm commitment natin. In this case, it is a sale. Ngayon, si ABC ko, similar kanina, concerned sa fluctuations ng Japanese yen. So in order to offset any changes, pumasok sa isang hedging. Isang hedging agreement para, gaya na sabi natin, to offset any changes sa Japanese yen, sa fluctuation na pwedeng mangyari. So basically, ulitin lang natin, recap tayo, para tayong sirang plaka dito. Pagpasok ka sa isang hedging agreement, basically, you are foregoing any possibility of receiving a gain just in order for you to manage or to offset any possible losses. Yun ang hedging instrument. So in this case, ganun yung nangyari. So si ABC ko entered into a 30-day forward contract to sell. Di ba? Na-explain natin to bakit to sell yan. Kasi si ABC ko makaka-receive ng 1 million yen galing kay Japanese firm kasi nagbenta siya eh. Si ABC ko Pinoy yan eh. Anong gagawin niya sa 1 million yen? So i-convert niya into peso. So makikipag-exchange siya, yung 1 million yen na, i-exchange niya sa bank para maka-receive siya ng fixed price of 470,000 at a fixed forward rate of 0.47. So fixed, yan yung hedging instrument nila. Now this is the relevant rates. So similar sa kanina, itong spot rate natin, explain natin yan, yung forward rate. Ano yung ulit yung forward rate? It is the rate as of this day. It is the settlement rate as of this day of a future transaction. Okay, yan si forward rate. Ang spot rate, ano siya? That is the current rate as of now. Yun lang si spot rate. Si forward rate, ano ulit? That is the settlement rate of a future. That is the settlement rate today of a future transaction. So, yung rate na yan, it refers to a future transaction. Kaya nga forward rate ang tawag eh. Kaya nga si spot rate, as of on the spot yan basically. So, recap tayo sa mga na-discuss natin para retention ba? Repetition. So, as you can see here, noong December 15, wala tayong entry for both. Kasi nga, similar sa hindi similar. Kasi nga, di ba dito, sales order lang eh. Wala pang nangyaring transaction. Nagkaroon lang kayo ng agreement na magbebentahan kayo. Kaya nga, sales order yan. Contract to sell pa lang yan. Kaya dito, wala yan. Walang entry. And sa hedging instrument, since, wala namang changes eh. 0.47 yan. 0.47. So, wala rin. Now, pagdating ng December 31, dyan na. Gaya na sabi natin, may kaibahan kay realized asset or liability when it comes to recording sa firm commitment. Kasi ang pagkakaiba nila pagdating sa recording sa journal entry. As you can see here, pagdating sa hedge item natin, yung firm sale commitment, nag-recognize tayo ng firm commitment asset in this case. Bakit asset? Kasi tingnan mo, yung initial forward rate natin is 0.47. Then, naging 0.485 siya. So it means na tawag dito? Excuse me. It means nakagain ka sa iyong firm commitment. So yung sale sa firm commitment. Kasi nga, tingnan mo. Tingnan to. As you can see here, di ba? Hindi spot rate ang ginamit natin but rather the forward rate. So take note of that. Kasi dito, pinag-usapan natin future sale as sale that will happen in the future. Di ba? Itong forward rate, anong purpose niya? That is the settlement rate as of this day for a future transaction. Kaya ang ginamit natin dito is yung forward rate. So yan intricacies yan Mga little details yan pagdating dito sa derivatives. So yun. As you can see, ginamit natin yung forward date kasi we are referring for a future transaction dito. Wala pa nangyari transaction So, forward date ang ginamit natin, hindi spot rate kasi non-existent pa yung transaction in this case. Kasi sa January 15 pa mangyayari. So, with that, applicable talaga na yung forward date yung gagamitin. Kaya in this case, as you can see, nagkaroon ng gain of 15 kasi ang price sana as of December 15, 470,000 yung marireceive ni ABC ko from the Japanese firm. Huwag kayo malito kasi diba pinag-usapan natin kanina, spot rate yung ginagamit natin. Pero yun is recognized asset, recognized liability. Ibig sabihin nangyari na yung sale. Naghihintay na lang ng bayaran. Pagdating dito sa firm sale commitment, hindi pa nangyayari yung sale. Sales order pa lang yan. Contract to sell pa lang yan. Wala pang nangyayari. Kaya, hindi natin ginagamit yung spot rate. Kasi ginagamit mo lang yung spot rate kapag nangyari na. Naghihintayan na lang kayo ng bayaran. Wala pa man dito nangyayaring Hindi pa man nangyayari dito yung sale. Contract to sell pa lang man yan. So, it is very applicable to use the forward rate. Okay? Forward rate ang gagamitin. Kasi nga, forward rate, ulitin natin, recap talaga to, repetition tayo for retention. Forward rate, ito yung settlement rate na gagamitin, settlement rate as of today for a future transaction. Kaya dito, as you can see, ang ginamit is the forward rate. So ganito yung sense yan. Yung nagbenta ka kay Japanese firm, yung marireceive mo sana in the future is as of December 15 is 470,000. Pero pagdating ng December 31, tataas yung marireceive mo galing kay Japanese firm. Kasi instead na 470 marireceive no, due to a fluctuation sa Japanese yen, 485,000 na yung marireceive mo. Good for you, di ba? Nadagdagan ng 15,000 yung marireceive mo from the Japanese firm. And to record that, ito yon, debit firm commitment and a gain on firm commitment. So ito, good for you Kasi ang as of December 15, 470 yung expected mong marireceive. Pagdating ng December 31, 485,000 na. Good for you. So kaya may gain yan dito sa ating hedge item. Now, pagdating sa hedging instrument, may loss ka. Kasi ganito. Kasi hedging instrument, di ba? Anong purpose ulit ng hedging instrument? To offset any changes na mangyayari sa hedge item mo. Because takot ka, you don't want to risk any changes that would have negative effect on you. So in this case, forward rate yun yung gagamitin natin kasi forward contract yan Yung settlement sa future pa. So in this case, parang binaliktad mo lang. 470, dito naman sa hedging instrument natin sa baba. Excuse me po. Ang pinag-usapan mo kay bangko, 470,000 yung marireceive mo for your 1 million yen, di ba? Sa hedging instrument mo. Pero pagdating ng December 31, yung price sa market ng 1 million yen is 485,000. Yung marireceive mo lang sa bangko is 470. Kung sa market sana yan, 485 sana yung marireceive mo galing sa bangko. Since naka-fix yung transaction mo sa bangko, 470 lang marireceive mo, ano yan? Loss sa'yo. Kaya ito. Loss on forward contract, 15K. So may forward contract liability ka, 15K. So as you can see here, nagbaliktaran lang. So yan analyzation yan, huwag kayong mahilo. Dito we're talking about the sales order. And forward rate yung ginamit natin kasi hindi pa nangyayaring sales Wala pang nangyayaring sales. Kaya hindi applicable gamitin yung spot rate. Okay? Hindi applicable gamitin ng spot rate kasi wala pa nangyayaring sales Yung settlement ng sales, yung mangyayaring sales sa future pa. Since sa future pa yung mangyayari, forward date ang applicable gamitin. Kaya this case, yung 470 mo, tumaas ng 485 yung marireceive mo, so may gain kang 15. In this case na pag sa hedging instrument mo, since fixed 470,000 yung marireceive mo sa bangko, kapag sa market ka nagbenta ng 1 million yen mo, 485 sana yung marireceive mo, wala 470 yung fixed marireceive mo so may loss ka na 15. So as you can see, nag-offset lang silang dalawa. So ang net gain or loss dito for this scenario? Wala, di ba? Wala, nag-offset lang yung gain na 15K and yung loss na 15K. So yan, isa yan sa difference between the sa firm commitment pati dun sa recognized asset or liability, di ba? Kasi sa recognized asset or liability, since nangyari na yung sale, since nangyari na yung purchase, ginagamit natin yung spot rate. Separate from the forward rate. Ginagamit natin yung spot rate for the hedge item, ginagamit natin yung forward rate for the hedging instrument. Pero pagdating dito sa firm sale commitment, kaya maganda to kasi firm sale commitment forward rate lang yung gagamitin mo. Kaya maganda to si firm sale commitment. Forward rate lang gagamitin mo for both hedge item and hedging instrument. Kaya tingnan nyo, nagka-cancel out lang silang dalawa. Kasi di ba pagdating doon sa previous example natin, si recognized asset and liability, since hindi before the settlement date, hindi pareho si spot rate at si forward rate, nagkakaroon ng differences, di ba? Pero pagdating dito sa firm sale commitment pa, since forward date lang ang gagamitin mo, so nagka-cancel out lang yan silang dalawa. So ito, pagdating ng January 15, so magsisettle na dito. So January 15, di ba? Yung pinag-usapan nilang madi-deliver yung goods January 15. So January 15 pa sila magre-recording. So in this case, anong nangyari? Yung sa hedge item natin, yung cash foreign currency, ulitin natin, yung cash foreign currency, yan yung Japanese yen mo. Yan yung 1 million mo. Wag kalimutan, 1 million mo. 1 million yen Yan yung 1 million yen mo. Kung saan, since for recording purposes, ni-record siya as Philippine peso. Kaya nga foreign currency ang nilagay dyan. So, recap lang. Sabi naman natin kanina. So, in this case, naka-receive ka ng 1 million yen. I-convert mo sa current rate of the sa spot rate as of January 15, which is 60, which is 0.46. So, 460 yung value ng 1 million yen mo. Then, ito, di-recognize mo na yung firm commitment asset mo kasi wala na tapos na yung transaction. Now, in this case, may mapapansin kayo. Ang ginamit na recording sa sales is kung ano yung forward date as of this day. As of kung kailan na yung sales order. Kung kailan nagkaroon ng agreement 470. Yung ginamit. To record the actual sale transaction, to recognize the change in the fair value of the firm commitment, and to recognize the firm commitment. Now, because of this transaction, nagkaroon ka ng loss on firm commitment kasi of 25,000 peso. Bakit? Kasi from 470, naging 485. So, pagdating ng January 15, naging 0.46. So, from 485, naging 460 na lang. Yung same sa ginawa ko kanina, di ba? Sa yung 470 yung 470 yan. Kaso nagbaba to 485. Tapos from 485 nag-increase to 460. Pumunta ng 460. So, i-account mo yung difference nilang dalawa of 25. Ito, i-account mo yung difference nilang dalawa as 15. O, di ba? Parang same lang yan sa kanina. So, analytical skills talaga, no? So, saan na tayo? Ito, same rin sa kanina. Cash local currency, yung na-receive mo sa bangko for exchanging your 1 million yen sa kanila. Dito, nilagay natin, no? 460,000. Forward contract liability mo, 15. And gain on forward contract, same dito yung logic. Na una, marireceive mo is 470. Tapos, since fixed marireceive mo as 470, nag-485 siya. Pagdating dito, naging 460 na lang. So, nagkaroon ka ng 25 gain on forward contract. Now, ito, nagbigay ng simplification. Simple entries yung ating, yung book natin. Para sa ano? Kasi ito, mga compound entry yan, di ba? So, ito, nagbigay ng simple entries dito para mas madali daw maintindihan. So, as you can see here, the simple entries on January 15 are the following. So, yung hedge item, yung loss on firm commitment, ito, to recognize the change in the fair value of the firm commitment. Yung 25K na loss. Firm commitment liability. Kasi, di ba? Okay. Kasi, di ba? Yung unang, yung i-record mo sanang unang babayaran is 470. Kaso, pagdating ng December 31, naging 485 na. So, mataas sana yung marireceive mo, di ba? 485,000 ka. Kaso pagdating ng January 15, 460 na lang yung marireceive mo. Bumaba. Bumaba ng 25,000. So, may loss ka on firm commitment. Yeah, yan yung nangyari. Ito naman, yung nagkaroon na ng bayaran. Yung nagkaroon na ng actual sale. So, naka-receive ka ng cash foreign currency, yung 1 million yen at 460,000. Yung sales mo recorded at the date of the sales order, the forward rate, 470. The difference, the firm commitment liability, yung 25K liability mo minus the 15K asset. Kasi nung una, nag-record ka ng 15K asset. Kasi di ba, from 470 to 485. Pagdating ng January 15, naging 485 to 460. So, nagkaroon ka ng liability, additional losses. So, kailangan mong inet yan silang dalawa. So, yung firm commitment liability mo is 10K. Oh. So, kung i-combine mo na yan sila, itong lalabas. Oh. Ito naman, sa hedging instrument natin, as usual, forward contract asset from 485 naging 46 na lang. So, nagkaroon ka ng gain. Opposite naman, no? Ito naman, bayaran. And ito, gaya ng ginawa natin kanina, yung offset of, yung net cash na lang. Net cash settlement na lang. So, 460 yan. 470 yan. 460. So, instead na bayaran ka na ng 10K kaysa magpalitan pa ng malaking cash between the two of you, hassle yun eh. So, yung net na lang nila. So, yan as you can see, yan yung firm sale commitment natin. Ngayon, let's go to a firm purchase commitment. Kasi yung illustration 5 natin is firm purchase, firm sale eh. Ngayon, purchase naman kung saan payable tayo dito. Cloud na pala. So, tulog na yung mga tao. So, ito, firm purchase commitment naman tayo. Noong December 15, 2001, si ABC ko committed to purchase goods. Pero, committed Buti pa yun, committed. Ito ang shot mo, hindi committed sa'yo. So, committed to purchase goods from a Korean. So, hindi pa yan hindi pa yan actual sale. Contract to sell pa lang yan. To purchase goods from a Korean firm for 10,000 won. Si ABC ko, if ABC ko cancels the commitment, it would be required to pay a penalty of 6,000 won. Now, ABC ko was concerned about the fluctuation in the Korean won. So, nagpumasok sa hedging instrument. So, same. Ito, may mali lang dito. Hindi yan 124,000. But rather, 12,400 lang yun. Nag-typo lang si Zeus. Yun. Same sa kanina. So, dito, di ba? Purchase goods siya. So, ibig sabihin, babayaran niya si Korean firm ng 10,000 wons. Kaso, problemado sa fluctuation eh. So, in order to offset any changes sa value ni 10,000 won, pumasok sa isang hedging instrument. Ito yon sa baba. Kung saan, bibili siya kay bangko ng 10,000 won. Ano ulit yung reasoning, bakit word yung terminology ganito? Kasi di ba babayaran niya si Korean firm ng 10,000 won. Pinoy ano siya Pinoy company yan si ABC ko Saan siya kukuha ng Korean won? Peso lang yan siya meron. Di kukuha sa bangko. Bibili siya ng Korean won sa bangko. Para yun yung pambayad niya sa Korean firm. Kaya dito nakalagay, buy 10,000 wons. Tapos yung ibabayad niya sa bangko para sa 10,000 won na yun is 12,400 kasi yung forward rate as of that time is 1.24 peso per won. So ito, similar sa kanina, yung spot rate natin and forward rate, take note, yung spot rate natin hindi natin gagamitin. Kasi, as we have said, anong reason ba't di gagamitin to? Hindi pa nangyari yung sale So, bakit ka gagamit ng spot rate? Di pa nangyari yung sale. Sa future pa mangyayari. So, applicable, gamitin yung forward rate. Kasi anong ulit yung forward rate? It is the settlement rate as of this day for a future transaction. Kaya forward rate yung hindi maganda, yung dapat gamitin. So ito, journal entry. Nung December 15, yung kung saan nag-commitment sila, walang recording. No entry. Wala sa hedge item kasi wala pa nangyaring transaction. Wala sa hedging instrument kasi same pa rin, no? 1.24, 1.24. Kasi yung 1.24, tama yung basis niya So, walang changes. So, no entry. Parati ako magbe-burp. So, ito naman, pagdating ng December 31 sa year-end, so may adjustment yan tayo dyan. For the hedge item firm purchase commitment, kung makikita nyo, from 1.24, naging 1.27 yung value ng peso to a Korean won. So, ano mangyayari dyan? Magkakaroon ng loss. Kasi, kita mo, mas malaki yung babayaran ni ABC ko. Dati ang babayaran niya lang for that 10,000 won is, ang babayaran niya lang dito sa Korean, is 1.24. Ngayon, ang babayaran niya is 1.27. Nagkaroon siya ng loss. Mas malaki yung babayaran niya. Kaya dito, nagkaroon ng loss of 300. Loss on firm commitment and a firm commitment liability of 300,000. Tandaan, forward rate ang ginamit. So, anong logic ulit? Anong reasoning? Nung December 15, ang babayaran niya lang sana, expected niyang babayaran for the purchase for his payable is 1.24. Malas-malas niya, naging 1.27, tumaas yung rate. Wala, no choice loss siya. But take note, pagdating dito sa hedging instrument for which the purpose is to offset any changes sa hedge item, kung makikita nyo, nagkaroon siya ng gain of 300. Kasi ang logic naman dito, ang marireceive niya kapag bibili siya ng 10,000 won sa bangko, ang babayaran niya is 12,400 lang. Kapag sa market siya bibili, ang babayaran niya is 12,700. Yun, di ba? Kapag bibili sa bangko ng Korean won, yung fixed na babayaran niya based on their forward contract is 12,400 lang. Kapag sa market siya bibili, ang babayaran niya is 12,700. So, nakatipid siya. Nakatipid siya ng 300. So, dito sa hedge item, yung babayaran niya kay Korean firm, mas tumaas yung value. Pero dito sa hedging instrument natin, yung babayaran niya sana for the 10,000 won, nakatipid siya ng 300. So, gain yan. Yun yung logic dyan. So, let's go to the entries on January 15. So, similar lang to. Ito, nag-purchase na siya ng inventory. As you can see, yung inventory niya is yung forward date as of this, kung kailan nagkaroon ng commitment. And, loss on the firm commitment, yung T, firm commitment liability, 3K. Yung binayaran niya, yung cash foreign currency, yung 10,000 won, 13K. As you can see, As you can see, nagkaroon siya ulit ng additional loss sa firm commitment. Bakit? Kasi from 12.7, from 1.27, mas tumaas yung value ng babayaran niya kasi naging 1.3. Lugi siya, kawawa naman. So, nagkaroon ng additional loss sa kanya kasi instead na 12,700, pagdating ng January 15, naging 13K yung babayaran niya. So, nagkaroon ng additional loss of 3K, o 300 I mean. Ito naman, pagdating sa hedging instrument natin, gain yung naranasan niya. Bakit? Kasi same logic eh. Di ba? Nung December 31, yung sabi natin dito, saan yun? Saan yun? Yung December 31, sabi natin dito, na instead na, na kapag bibili siya ng Korean won, 10,000 sa bangko at a fix of 12,400, pero sa market, kapag sa market sa bibili, 12,700, di ba? So nakatipid siya ng 300 peso. Ngayon, pagdating ng January 15, yung presyo ng 10,000 Korean won sa market is 1.3, 13,000. Kaso, kapag bibili lang sa bangko, based on their forward contract, 12,400 lang yung babayaran niya. So nakatipid siya. So nakatipid siya ng additional 300. Ito, gain. Yan. So ito, alternative lang, same logic kanina. So ito na lang, net cash settlement of 600 yung bayaran nila. So yan lang, si firm purchase commitment. So ang kaibahan lang ni firm purchase commitment is yung sa journal entry and yung ginagamit sa kanya forward date lang. Ano ulit yung reason bakit forward date ang ginagamit? Kasi as of this day, in this case December 15, for both firm purchase and firm sale commitment, wala pa nangyaring sale wala pa nangyaring purchase So bakit ka gagamit ng spot rate? Sa future pa mangyayari yung transaction. So since sa future pa mangyayari yung transaction, forward date ang gagamitin mo. Kasi nga ano ulit yung forward rate? It is the settlement rate as of this day for a future transaction. Basically, yan yung meaning niya. So yan, let's go to the kasi pinag-usapan natin dito is fair value hedge, di ba? And as we know, ang fair value hedge, ito yung kanyang nature. So ngayon, i-compare natin sa cash flow hedge. Ano bang difference ng dalawa? Kasi usually, ito yung part na kailangan ma-differentiate ng estudyante. Kasi iba yung style of recording ng dalawa. So ito, nature. Ito yung nature na di ba? Actually, pag-usapan natin ito kanina pero ito mas designated lang, mas klaro. So ang nature ng fair value hedge sa hedge of exposure to changes in the fair value. Sa cash flow hedge, as we have said, yung pag-hedge niya is to the exposure of the hedge item sa variability and unexpected future cash flow. Ito, nagpo-focus sa changes fair value. Etong cash flow hedge, tandaan nyo yung difference ng dalawa. Board exam yan. Board exam question yan. Difference sila, tiris. Si cash flow hedge sa naman? Future cash flows. Di ba? Sa future cash flows siya. So, itong hedge item nila, di ba? Ito, nasabi natin kanina, si fair value hedge, under sa kanya yung recognized asset or liability and unrecognized firm commitment. Pagdating naman kay cash flow hedge, under rin sa kanya recognized asset or liability, yung highly probable forecast transaction and yung net investment in foreign operation. Cash flow hedge yan sila. Yung hedging instrument nila, any derivative. Yung pag-account sa fair value hedge for both hedge item and hedging instrument, fair value, any changes sa profit or loss yung pag-recognize. Pagdating naman sa cash flow hedge, the hedge instrument is measured at its regular measurement basis. Yung sa hedging instrument, pag-measure sa kanya fair value kasi gaya na sabi natin sa hedging, yung pag-measure natin derivatives is based on fair value, di ba? The fair value yan sila. Ito na, dito sila nagkakaisa pa sa mga major difference ng dalawa. Pagdating kay cash flow hedge, gaya na sabi din kanina, any changes in the fair value, yung effective portion sa other comprehensive income, sa OCI na recognize. Yung ineffective portion sa profit or loss. Ito naman, difference ng firm commitment sa forecast transaction. Ito, nasabi natin, yung firm commitment, it is a binding agreement to purchase or to sell. Yeah? Contract of purchase, contract to sell, contract to purchase, contract to sell, similar lang yan. A specified quantity at a specified price on specified future dates. So may kontrata talaga yan, may agreement talaga yan. It is contractually established and enforceable. Performance is contractually required, may obligation sila. Non-performance may result to penalty for breach of contract. Kasi agreement yun eh. All the relevant terms of the contract, quantity, price, and timing are fixed. Pagdating naman sa forecast transaction, it is uncommitted. Parang shota mo. Uncommitted but anticipated future transaction. This can be established contractually or merely probable because of the entities, ito yung sasabi natin kanina, established pattern or past practices. Ibig sabihin, kung ano yung customary na ginagawa ng entity, like every week bumibili siya ng ganitong amount of supply, 100 kilos of price, every week, yan yung ginagawa niya, yung customary transactions niya, yun, under yan sa forecast transaction. Kasi ina-anticipate mo eh, based on the past practice ng company. Ina-anticipate mo na every week, 100 kilos of price ang binibili. Performance may or may not be contractually required. Performance may arise out of product and intent rather than a contract. Kung ano yung customary, kung ano yung practices ng entity. Some of the relevant terms of the contract are variable, gaya ng pricing. Kaya sabi natin kanina, yung anticipated yung customary transaction is bumibili ng rice every week. 100 kilos of rice every week. Na yung kilo man ng rice is pabago-bago, di ba? So, at least, yung ilang kilos yung kailangan, 100, pero yung, in this case, the price is variable. Ito, like this one. Ito, firm commitment, klarong-klaro, specified lahat. A contract to sell 1,000 ounces of silver at a fixed price of 210 to be delivered 2 months after the contract of sale. Pagdating sa forecast transaction, itong example, meron tayo. Unexpected purchase of 1,000 kilograms of raw materials to be used in the next quarter production. O, tiyan mo, nilagay lang 1,000 kilograms, hindi alam kung magkano yung price. Because in this case, the price is variable. Budgeted sales for the next quarter, quantity is variable, depende sa contractually record interest payments on a floating rate, variable rate, loan payable. So, type of hedges, fair value hedge, except a hedge for a foreign currency risk of a firm commitment which may be accounted for as a value hedge or cash flow hedge. Yan, example natin yan dito. Cash flow hedge, nature of hedge, to unfix or unlock a fixed term, etc. etc. Ito, illustration 9 tayo, sample. So, sabi dito, the cash flow hedge forecasted purchase transaction. So yan, cash flow hedge, forecasted purchase transaction. Hindi sa fair value hedge ang gagamitin, but rather a cash flow hedge. So alam na natin ano expect natin. So ABC Co produces potato chips. So yun yung ginagawa niya. On December 15, 2001, ABC Co anticipates purchasing 1,000 kilograms of potatoes on January 15, 2022. As you can see here, anticipated. And yung pricing variable. Basta bibili lang siya ng 1,000 kilograms of potatoes by January 15. So yan, forecasted purchase transaction, an example of that. So nung si ABC, concern siya, paulit-ulit, concern siya. So nag-hedging dito. Concern about the fluctuation in the price. So pumasok siya sa isang forward contract na nung December 15. Kung saan, the forward contract to purchase 1,000 kilograms of potatoes at a forward rate of 45. Kung saan, pumasok siya sa isang kontrata na nung December 15, 30 days, in 30 days, after 30 days, magpe-purchase siya ng 1,000 kilograms of potatoes at a forward rate of 45 per kilo or 45,000. The forward contract will be settled net on January 15, 2022. As you can see here, ito pinakita lang yun kung anong kailangan niya. Na kailangan niyang mag-purchase ng o in-anticipate niya mag-purchase ng 1,000 kilograms of potatoes. Dito sa second part, pumasok sa isang kontrata na kung saan by January 15, bibili siya ng 1,000 kilograms of potatoes at a forward rate of 45 kilogram, 45 pesos per kilogram. Meaning, pagkadating ng January 15, bibili siya ng potatoes, 1,000 kilograms of potatoes at 45,000 peso. Fix na fix. Yan yung pinasok niyang forward contract. So since the hedge item is a forecasted transaction, the hedging instrument, etong sa baba, shall be accounted for as a cash flow head. By entering into the forward contract, ABC Co hedges its exposure to variability and expected future cash flows from purchasing potatoes due to the possible fluctuation ng price of potatoes. So nakita niyo dito. Trinay niyang i-hedge, trinay niyang i-limit, trinay niyang i-manage, trinay niyang i-mitigate yung exposure niya sa variability ng expected future cash flows when it comes to purchasing potato. Na for him, since concern niya yung fluctuation ng prices ng potatoes, napag-isipan niya, napag-decide niya na, sige, after 30 days, pagbibili ako ng potato, ang babayaran ko lang 45,000 pesos for that 1,000 kilograms. Para, sinild niya na, niless niya na yung exposure niya from any fluctuation sa prices ng potato. Exposure, hedges its exposure to variability and unexpected future cash flows. So in effect, because of this, ABC Co has fixed or locked in the amount of the cash flow to purchase potatoes at 45,000 peso. So, if prices increase, si ABC Co shall recognize again. Kasi instead na yung increase price yung babayaran niya, 45,000 yung babayaran niya. Kasi yun yung fix yun na pagkasunduan. Pero alam natin, kapag bumaba yung price ng potato, di loss yung i-recognize niya. Kasi required pa rin siyang bayaran yung 45,000. Required pa rin siyang bayaran na yung amount na 45,000. So, ito yung relevant prices for kilograms of potato. As you can see here, ang gagamitin dito is anong gagamitin dito? Anong rate? Forward rate. Bakit? Kasi same sa logic na ginamit natin sa firm commitment, hindi pa nangyari yung sale in this case, di ba? Yung doon sa firm commitment, nagkaroon pa lang ng kasunduan pero wala pang sales. Di ba? Kaya forward yung ginamit natin, forward price. Forward rate. Pagdating dito sa similar reasoning. Hindi pa nangyayari yung sale Hindi pa nangyayari yung purchase. Ina-anticipate mo palang mangyari yan. So there's no reason for you to use a spot price. Kaya ang gagamitin mo yung forward price. Because that is the settlement price as of this day for a future transaction. In this case, that is 45 for December 15. Kaya 45,000 yan. So yan. So, similar, nung December 15, wala kang i-record na entry. Kasi, nag-anticipate ka pa lang ano yan i-record mo sa anticipate mo? Debit anticipate? Hindi, wala kang i-record no entry. Similar dito sa hedging instrument natin, wala rin. Kasi, 45 yan Pagdating sa entries ng December 31, 2001, wala ka pa rin binili sa future pa. Wala Pagdating sa hedging instrument natin, as you can see, may gain ka. Pero ang recording natin hindi gain. Accumulated OCI. Kasi as you can see, sa future, required ka lang, sa iyong contract, required ka lang magbayad ng 45,000 sa potatoes. And as you can see, kapag sa market ka bibili ng potatoes as of December 31, 55,000 yung babayaran mo. Required ka lang magbayad ng 45 pagdating sa market, 55 na yung presyo. So nakatipid ka ng 10,000. Forward contract asset, debit 10,000, accumulated OCI, credit 10,000. So instead na gain, ang ginamit, since cash flow hedge to, ang ginamit accumulated OCI. So basically, it's a gain on you. It's a positive impact on you. Pero sa OCI lang ni-record kasi cash flow hedge to. Ngayon, January 15, ano nangyari? Noong January 15, nangyari na yung sale. In-anticipate mo na, nangyari na yung sale. Akala ko mag-atsyong ako. Nangyari na yung sale. And as you can see, nung binili mo na yung potato, ang babayaran mo is 60,000. Kasi yun yung presyuhan eh. Yun yung presyuhan. Pero, akala ko ba 45 ang babayaran yan? Oo, 45 yung babayaran niya in essence. Paano? Kahit na 60,000 yung binigay niya, yung pambayad niya lang talaga dyan is 45. Bakit? Because of the forward contract, because of the hedging instrument na pinasukan niya. Kasi dito, tingnan nyo. Diba? From 55, tumaas to 60 yung price ng potato sa market. So, pero required lang siyang bayaran is 45. So, nagkaroon ulit siya ng gain of 5,000. Ito yun. O, di ba? Nagkaroon siya ulit ng gain of 5,000 pero ang recording natin sa accumulated OCI kasi cash flow hedge to. Now, in this case, punta tayo dito sa baba. Ito na yun. From this forward contract, naka-receive siya ng 15,000 from this forward contract. Na, in essence, ang babayaran niya lang talaga, since naka-receive siya ng 15,000, is 45,000. Di ba? Kasi kahit na binayaran niya dito is 60, pero since pumasok siya sa isang hedging instrument to make sure na yung babayaran niya is 45 lang, naka-receive siya ng 15 dito. So, inet mo yan. In essence, ang binayaran niya lang talaga is 45. So, na-limit niya yung exposure niya sa fluctuation ng expected future cash flows ng purchasing of potato. Kasi gusto niya 45 lang eh. Nakuha niya yung gusto niya. 60 nga yung binayaran niya dito pero naka-receive siya ng 15 dito na cash. So in essence, ulitin natin. 45 yung na-receive niya. 45k yung in essence binayaran niya. So yun. Hedging. Di ba? Hedging. Nalilimit mo yung risk. Nalilimit mo yung exposure mo to risk. Yan yung kahalagahan ni hedging. Sir, what if dito sir, bumaba yung bumaba yung pricing ng potato. So, required ka pa rin magbayad ng 45, di ba? Oo, ganun. Required ka pa rin magbayad ng 45. Kahit na bumaba yung presyo ng potatoes dito. Paano? For example, dito, ang ilalagay mo dito is accumulated LCI, credit, forward contract liability. Oo, ganun. So, let's say ang binayad mo dito is let's say yan naman tong mouse. Sira na naman scroll. Bili naman tayo bago. Saan yun? Let's say yung mo dito. Yung babayaran mo at pagka January 15 is 30. Yun sabihin natin. 30 yung babayaran mo. So, inventory and cash. Sample lang naman to. 30. Yan yung babayaran mo. Kaso ang problema, ang pinasukan mong forward contract, required ka magbayad ng 45. Di ba? Required ka magbayad ng 45. So, if that's the case, if that's the case, naka-receive ka ng, wait lang, hingi tayo. So, di ba sa forward contract na pinasok mo, 45k yung kailangan mong bayaran. Pero yung bumili ka ng potato, ang binayaran mo lang is 30k. Mouse ka lang. So, pagdating ng purchase mo sa potato, 30k lang yung binayaran mo. Pero since sa forward contract mo, required ka magbayad ng 40k, so magiging mangyari dyan, meron kang i-record dito na forward contract liability of 15k and cash of 15k. Kasi bumaba yung from 45, 30 na lang yung binayaran mo. From 45, 30 na lang yung binayaran mo. From 45 to 39. From the required 45K sa iyong forward contract, yung price sa market is 30,000 na lang. O lugi ka, di ba? Ang babayaran mo 45, tapos yung price sa market 30. O nalugi ka ng 15K doon. Nalugi ka ng 15K doon. So, with that, nagloko talaga. With that, forward contract, bakit forward dalabo? And cash 15. So, in essence, ang babayaran mo pa rin is, pag ganiting senaryo, in essence, ang babayaran mo pa rin is 45,000. Wala eh. Pumasok kasi isang forward contract eh. So, gaya na sabi natin, ang hedging, pinapasukan mo yan to, ano yung ulit yun? To offset any changes na mangyayari sa iyong hedge item. In this case, ganun rin yun. O, di ba? In this case, di ba? 60K nga yung kailangan mong bayaran. Pero because of this hedging na ginawa mo, because of this 15K, in essence, naging 45 talaga yung binayaran mo. In the second scenario, naging 30 na lang yung price ng potato. So, 30K na lang yung binayad mo. Pero since meron kang forward contract na pinasok, and liability yung nakuha mo doon, chicken. Naglulok ka. Liability yung nakuha mo doon. So, ang mangyayari, lock ka. Tanggalin ko mga ito. Yung mangyayari, saan yung sabihin ko? Since in the second scenario, 30K na lang yung binayad mo sa sa potato, pero since pumasok ka sa isang forward contract, sa isang hedging instrument, so, nagkaroon ka ng ng forward contract liability and ng credit cash of 15K. So in essence, in that case, 45K pa rin yung binayaran mo. 45K pa rin. Malay. Pumasok sa hedging instrument eh. Di ba? Pag nagpumasok ka sa hedging instrument, gaya na sabi din kanina, which ilang beses natin ulit-ulit sinasabi, pag pumasok ka sa isang hedging instrument, you're foregoing any possibility of gaining something just in order for you to mitigate, to offset any possible losses. Yan si hedging instrument. So with that, application of concepts, bigay ko na sa inyo. So, yan yung discussion natin for part 2, forward contracts. Part 3 and part 4, next video, mga Monday ko na siguro ipopost yun. Monday or Sunday. Depende sa mood ko. Kasi gagawin ko pa yung sa insurance contract nyo and sa BOT. Then yung sa mga third years naman, kailangan ko rin tapusin yung remaining titles ng Device Corporation Code tas yung cooperatives pa. So anyways, that is all. Have a nice sleep ahead.